false flag events. He would look for some pretext that was at least plausible. He's moved well beyond that. So he is now going through what we would expect to launch an invasion. He is going to soften the defenses. So they're attacking the military, they're attacking communications, they are attacking government facilities. Ultimately, we expect heavy use of cyber. And I think we also have to be very cautious whether he uses cyber against those supporting Ukraine. That's really what he's been doing last night.
What is the regime change today in the Academy securities world? Is it an analysis of central banks that will delay, or do you go to your expertise, Peter, in the short-term yield space?
So I think the one thing we've got to do is, we've got to get back to energy independence, right? This is now clearly ridiculous that we're relying on countries that don't share any of our social views on this. We gave up so much in this push to sustainability, and that's important. So I think you're supposed to be looking at oil services companies, pipelines. And we if you go back to the first days of this administration, we did stop the Keystone pipeline, but we're allowing Nord Stream 2 to, proceed. So I think we've got to rethink all of that. We've got to deal with commodities. In the meantime, we've got to figure out what can stop Putin. And I think minor sanctions have proven ineffective and continue to prove ineffective.
Based on what's going on this morning, Peter, have you been surprised, frankly, that oil prices aren't even higher?
Yeah, I think the problem there is there's this belief still, I guess, that Europe won't have the guts to really stop that oil supply from Russia. I think that's something, unfortunately, we have to do, because Putin's not going to take any softness, or he is only going to take softness as a reason to be more progressive and more aggressive.
At what point, Peter, do you take a look at where oil prices are, and frankly, where a lot of people are expecting them to go? And do you say this is going to create a stagflationary type of environment, something that is going to really crimp growth more materially than we previously thought?
Yeah, and I think you're right, though. It's more about where oil is going to be 6 months, a year down the road. And I think it's going to be permanently high. I don't see any way to get back to, quote unquote, business as usual after Putin's actions for the past few days. So we're going to have to build out. I think we're going to have to do a lot to support this. I'm not sure this completely takes the Fed off the table, but we already had questions about the Fed, how much they can do with rate hikes to fix supply chain issues. This is just another massive supply chain issue. So I think the Fed's going to have to be really cautious in what they do, and they're going to have to try and figure out how to navigate this. And the U.S. might have to do things like look at taking back some of the oil taxes, figuring out ways to ensure that the average person isn't that affected. Because I think we are going to have to deal with this friction with Russia right now, or this almost war with Russia.
Pete, let's try and get 6 to 12 months ahead. I know that's tremendously difficult on a morning like this morning, but as you know, initially the shock, it's a global issue. Then over the next several months, it becomes more of a regional story, and then just local pain. And Pete, I wonder from your perspective, what makes you think this could remain a global story for longer than several weeks, several months?
I think this is really going to trigger both Europe and the U.S. rethinking how we're dealing with energy. And I think that's going to be a long-term process, right? We are going to have to get back to exploring for energy, developing our own resources, pushing hard on sustainability. Maybe nukes have to come back on the table. So we have to think about energy. I think that's going to be the big, long-reaching thing. Just like the pandemic has set this kind of multi-year supply chain effect in, I think Russia's now going to have everyone rethinking how we get to sustainability. It's going to be huge for the energy industry, hugely important for us. And that's the global story I think that we're going to be talking about for years down the road, as the global economy kind of normalizes X energy.
Pete, for many, many months now, in fact, over the last 12 months, been a lot of pushback to the 1970s conversation, and Lisa's mentioned several times, not just today, the word stagflation. Pete, is that what we should be talking about now? Does that parallel start to make more sense?
I don't think so. I think we will find ways around, we'll figure out ways to deal with this. The U.S. economy has been growing. Again, a lot of this is still going to be very good for the U.S. economy. We're seeing jobs get pulled back, this onshoring and nearshoring. I think that's just going to accelerate. So we see this global delinkage, right? We're seeing delinkage. We're seeing much more of a Russia, China, I don't want to say alliance, because I think they just, it's a marriage of convenience, but how we shape the world is going to be very different. So I think I'm looking for U.S.-focused companies, domestic-focused companies, North American-focused companies, Latin America. That's the area I think that we're going to be part of, and we are going to see this deglobalization. I think the markets are overreacting a little bit to what's going on here. Russia's never been a huge consumer of our goods. Ukraine's not. So I think ultimately we're going to get a bounce on this, and this will propel us to decent domestic growth.
Hey, Pete, send our best to the generals at Academy. It's great to catch up with you, sir. Peter Cheer of Academy Securities. Tom, that line from Boris Johnson, the British Prime Minister, Minister from 25 minutes ago. We must also collectively cease the dependence on Russian oil and gas that for too long has given Putin his grip on Western politics.
John, to the south, and piecing together the news sources, I need to be very careful here, and I go with this because it is from TASS, of course, the Russian Federation news agency, and also reported by Al Jazeera. The Ukrainian ambassador, Vasily Bodnar of Ukraine, has in some form requested of Turkey to close the Bosphorus and Dardanelles, but particularly the Bosphorus Strait, to Russian ships. That is a loaded statement, John, and speaks back to pre-World War II and the Montreux Convention.
Tom, let's take a couple of minutes and come back and you build that out a little bit more. Tom Keene, Lisa Bramis and Jonathan Ferro. Futures are negative 2.5% on the S&P, on the Nasdaq down by more than 3 percentage points. Yields are lower by 13 basis points and crude is higher, up by almost 7%. This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Demilitarize the country and replace its leaders, the dark goals of the Russian president for Ukraine. The market responds to this as Russia invades the country. Equities down by 2.4% on the S&P. On the Nasdaq, we're down by 3 percentage points. Coming into today, the story was already bleak for equities. We were down 11% on the S&P year to date, down 17 on the Nasdaq 100. We take more weight off the gains of last year. Tom, that's the equity story. You and I have been going back and forth and the latest military movements. We talked about those military vehicles reportedly. That report coming from Ukraine and border security, those military vehicles off Russia going into the Kyiv region. And you stressed, Tom, just in the last 20 minutes, let's work through this together, what we're hearing now.
Down in the Black Sea, and that's where I'm watching most. I get that from Admiral Stavridis, John. And of course, Ukraine is huge. There is the movement west of Poland and potential refugees. But in Odessa to the north, if you go directly down across the Black Sea, you've got to get into the Black Sea. And you do that through the Bosphorus Straits. And there is a dialogue out from TASS, from Al Jazeera and others that the Ukrainian ambassador has requested of Turkey, a NATO member, to close the Bosphorus Straits. This is highly contentious, goes back to 1936. Stalin went after this in late 1939, I believe it was as well. But that is a third rail debate for Mr. Putin, if there was even a consideration of cutting off the Black Sea.
And Tom, as you keep saying, things are moving very, very quickly. And as we all keep saying, when the headlines come through, I'll bring those headlines to you. I'll bring you the sources for those headlines as well. That's the equity picture. Here's the commodity story. It's pretty obvious, isn't it? Crude up, nat gas up. Nat gas in Europe up by 36% today. Intraday move on crude, 104 on Brent, triple digits. Very briefly on WTI as well, up 7.5%. What is less obvious is what this means for the Federal Reserve. There is a bid into Treasuries today, a haven bid, but just how much of Fed action for this year do you want to take off the table off the back of this? Twos, 148.61. Down 11 or 12 basis points. And Tom, that will set us up for foreign exchange as well. Switch on the board and get to the haven play. Dollar yen, Euro Swiss. Euro Swiss, negative 0.7%.
Wow, that's a big move just
Stronger
in 5
Swissy.
minutes.
Dollar yen, negative 1/3%. Stronger yen. Tom Keene, dollar yen, 114.64.
These are big and sudden moves, folks. And for those just joining us in on radio and television, these are moves in real time. And on Euro Swissy, John, we're really at a critical point right now.
That's the cross-asset price action. Let's get you some single names and say good morning to Romain. Good morning, Romain.
Hey, good morning, John. The broad-based sell-off that we saw on Tuesday and Wednesday extending here at Thursday in the pre-market with the S&P, of course, moving deeper into correction territory based on futures pricing. The Nasdaq right now teetering on the precipice of bear market territory. All of the big cap tech stocks are on the back foot, including Apple shares, which are down about 4%. Tesla down 6-7% here on the day. Any stock right now that has cross-border exposure also getting sold. United Airlines shares down about 6%. One of the few things getting bid, of course, are energy stocks. You talk about, of course, that move that we saw in Brent crude and in natural gas. Cheniere Energy here, the largest exporter of liquefied natural gas here in the United States, higher by about 7.6%. And pretty much everything in the energy space right now. If you go through the S&P 500 energies index right now, 21 stocks in that index, all 21 higher here in the pre-market. You keep it going here. We're also seeing a big bid come into some of the defense contractors, including Lockheed Martin and Northrop. Raytheon, which of course makes the Tomahawk missile and a lot of the key interceptor missiles that our Navy uses. Those shares are up about 3%. Mining companies getting bid. Newmont, Barrick Gold up about a couple of percentage points. And Tom, we can't forget about some of the Russian stocks. There are actually a few that trade here in the U.S. Yandex is the biggest actually listed here in New York, down 30%, excuse me, right now here in the pre-market. That's coming on the heels of a 36% slide over the previous 4 days.
Ryan Bostic, thank you so much. We're continuing to monitor markets on the move. The VIX, 6 big figures out to 37.05. John, I'm looking at the U.S. 2-year as well. I think that's at a critical level.
Well, that's setting the stage, Tom, for this broader conversation about central bank moves in the middle of March.
Exactly.
Does this change things for the Federal Reserve? We've been dancing around 150 and 160 for the last few weeks. So allow me to stress that, Tom. Within the range of the last few weeks, we haven't broken down through that. Still in and around 150.
Yeah, we're going to have to see there, and we'll continue to monitor this. Right now, with a broader view, Wei Li joins us, Global Chief Investment Strategist at BlackRock Investment Institute. Wei, thank you for taking time with us this morning. I love in the middle of your note, you go all James Bullard on us and talk about regime shift. How will BlackRock deal with the regime shift Mr. Putin has handled us?
Well, there are many ways to look at the definition of a regime shift. When we talk about regime shift in our note is around the fact that we had a very rare combination of stock up, bonds down return last year, and that was our expectation for this year. And that, in our view, defines a regime change. And also, we are entering a higher inflationary regime, and that has consequences for asset allocation as well. But more broadly, in light of the development on the geopolitical front, I would just kind of stress that we entered 2022 having lowered our risk budget within our asset allocation framework. And looking back, that certainly, given central bank confusion, given geopolitical development, that was a prudent thing to do. We were getting ready to build our shopping basket, but in light of geopolitical uncertainty, we want to see how it plays out through the inflation, through central bank calculus.
Weili, we hear in French right now from the gentleman from France, Mr. Macron, of course, facing an election as well, and he makes very clear in his headlines that sanctions against Russia will match its actions. Another Frenchman needs to speak, and that is Christine Lagarde of the ECB. Weili, how should Madame Lagarde address this moment?
There's a lot of considerations that plays to central bank calculus. On the one hand, the supply-driven inflation shock, inflation dynamics is just getting intensified because of geopolitical dynamics. On the other hand, in going into a inflation environment, what should central banks' rate hike path play out, all the while also having a safe haven bid? I think the picture is really a lot more nuanced, really a lot more complicated than just a immediate kind of inflation shock or immediate safe haven bid, which is why yields have been swinging wildly and unbalanced, not moved a whole lot as what you would expect versus the magnitude of the development.
Weili, just working through the moves in the European banking sector off the back of some of these headlines this morning. BNP down by 9%, Deutsche Bank down by 10%, SocGen down by 11%, UniCredit down by 11%. Weili, as you know, this has been a big trade for a lot of people. The idea the ECB would hike interest rates, Europe would recover, get long European financials. How does that trade stack up now?
Well, for central banks to exit extraordinarily accommodative environment in a macro dynamics that is very much restart shaped, not your typical recovery, we do think that central banks should and can kind of normalize rates to more neutral kind of state. But going beyond that, in our view, is not warranted because inflationary dynamics is supply driven, and now in light of geopolitical dynamics, that is even more. It's intensifying the supply driven inflation shock. So we do think that central banks will kick off. That include the Fed, and markets are pricing in for ECB. But the cumulative amount of rate hikes, which is ultimately, in our view, what matters for longer term risk sentiment and asset allocation, the cumulative amount of rate hikes in this cycle should and will be, in our view, a lot more muted in comparison with what we got used to in previous cycles. And the reaction in banking sector, to your point, actually is it speaks to the confusion and elevated state of uncertainty in reading this very murky central bank picture that we see playing out.
Weili, thank you. Weili of BlackRock there on a situation in Europe and worldwide. And Lisa, we're all trying to work out what that Fed speak sounds like a little bit later. The pressure on those individuals now to set up a March meeting.
Honestly, before what happened this week, we were talking about a Fed possibly making an error and moving too quickly. And that was why you saw the flattening yield curve. The narrative has shifted. And now there is a question of whether we'll be unable to avoid some sort of more stagflationary type of environment with the higher oil prices really crimping growth. And that has been what is driving the flattening yield curve, with the long end really driving the action, not necessarily the short end, which is also seeing yields decline.
When we were working through various scenarios over the last several weeks around this story, one repeat that I got, one word that I got repeated again and again was more. Maybe they have to do more and not less because of the crude factor here. And you see that energy prices up in a massive way, Lisa.
So a lot of people are saying, well, what can the Fed do by raising rates to address the oil situation? They're going to just try to support growth because growth might be more impacted by oil prices at such highs. The uncertainty, the degree of uncertainty right now, to Whaley's point, is the reason why you're seeing such massive volatility. Either way, the growth outlook, and I think it's right for you to pick up in the European banks, the growth outlook for the Euro region has suddenly shifted in a massive way in ways that possibly will upend one of the most popular trades out there.
Well, the big question, Tom, now is whether these sanctions hit Russian energy. These are the lines out of Emmanuel Macron, the French president. He vows the response is, quote, without weakness to Russia's, quote, act of war. Macron saying Russia's attack on Ukraine is a turning point in European history.
I go to the South, John, and now with the Telegraph and Reuters as well, talking of this conversation of Ukraine requesting of NATO member Turkey to, quote unquote, close the Bosphorus Strait to Russian shipping. To me, John, that is an absolutely key. Is that a sanction? I don't know what it is, but this harkens back, John, to, winds of war, 36, 37, 38 periods. That's an extraordinary moment. We'll have to watch that very carefully. What will Mr. Erdogan do? Which side will he select?
Coming up, 8:30 Eastern, we'll catch up with Rob Rosner, the Morgan Stanley senior U.S. economist. Why do I always do that to Rob?
Because you're talking like
time.
Me. You got to stop talking like me.
I do that to Rob every single time. Tom Keene, Lisa Bramis and Jonathan Ferro. Futures down 2.6%. On the Nasdaq, we're down by more than 3 percentage points. Yields down by 13 basis points. And crude higher, backing away from triple digits. We breached that level on WTI briefly, 98.74 now. We're up by 7.2%. A quick look at Brent for you. Brent crude at 104.26, up by 7.66%. From New York City, the coverage continues on radio, on TV. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. Vladimir Putin says the U.S. and its allies have crossed a red line, so he has begun a full-scale invasion of Ukraine. Russia launched a barrage of missile, artillery, and air attacks early Thursday. Ukraine has reported dozens of casualties and says the capital, Kiev, was under attack. President Biden is threatening to impose more sanctions and will speak after a virtual meeting with other G7 leaders. NATO is continuing to deploy more land and air forces to member countries near Ukraine. The alliance will hold a virtual summit Friday to discuss its reaction to the invasion. The Biden administration has repeatedly ruled out sending U.S. or NATO forces into Ukraine. The four major precious metals all rose after the Russian attacks. The action boosted demand for gold, silver, palladium, and platinum. It also potentially threatened supplies. And Alibaba separately has reported the slowest revenue growth since it went public. That underscores how China's crackdown on its tech sector is hurting the e-commerce giant. Sales rose 9.7% for the 3 months, ending in December. That's well below the 40% or more growth that was common before the government scrutiny began. Moderna posted fourth quarter sales and profit that beat estimates. The drug maker said it has signed $19 billion in orders for 2022 sales of its coronavirus vaccine. That's up slightly from the amount announced back in January. Moderna is racing with rivals Pfizer and BioNTech to ramp up production and sell its COVID shots around the world. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
the Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I welcome the decision of some members of this council to meet as soon as possible to consider the necessary decision that would condemn the aggression that you launch on my people. There is no purgatory for war criminals. They go straight to hell.
The words of Ukrainian ambassador to the United Nations from New York. Equities down by 2.6% on the S&P. On the Nasdaq, we're down by 3.27 percentage points. Into the bond market, yields lower by 14 basis points at 185.60. Crude higher by almost 8 full percentage points now. 99.26 on WTI, away from session highs. Brent crude still nicely through 100. President Vladimir Putin, Tom, vowing to, quote, demilitarize the country and replace its leaders, and things are moving very, very fast this morning.
Really can't emphasize that enough. To those of you joining on radio and television, the rate of change is not a rate of change. It's second derivative from about 4 a.m. New York time this morning. And just measured by Euro Swissy, John, we're going to get a 102 print for the second time here at any day. John, we saw a 102 on strong Swiss at about 11 p.m. last night. We're there again.
Let's work through the commodity story, Tom.
Sure.
Javier Blas put out a story earlier this week, and I just want to go through the numbers, just so everyone understands what is still happening almost every single day. In one day this week, the EU, UK, and US likely spent $700 million on commodities from Russia. Tom, 350 million of oil and refined products, another 250 million worth of Russian natural gas, plus millions on aluminum, coal, nickel, titanium, gold, and other commodities as well. Tom, Javier working through those numbers, it's important to keep going over this, because when you hear the strong language, the rhetoric that you'll get from Western leaders today, the numbers also speak for themselves.
Well, they do. I mean, the numbers are moving, and to bring in Javier now with his global knowledge, and particularly his knowledge of south of Ukraine, is a great pleasure. Of course, writing with Bloomberg Opinion in his acclaimed book on oil this year. Javier Blas, the Bosphorus Strait is a narrow point of 700 meters just outside Istanbul. You have been there. You've been to that acclaimed mosque on the Asian side. The view from that mosque with the fire that it had a year ago, the view from that mosque of Russian ships is threatened. How would Mr. Putin react if we cut off the ships and cut off the oil of Russia through the Bosphorus Strait to the Mediterranean?
No one really knows what will happen. I mean, Turkey is on his right under international agreements to stop Russian warships going through the Bosphorus Strait. He feels that he's threatening his own interests. We'll see whether Turkey takes that call that it was done by Ukraine. But it's much more difficult to stop the flow of oil tankers, and certainly most of the oil tankers that cross the Bosphorus Strait do so under different flags, not Russian flags. So it will not stop really the flows of Russian oil.
Javier, it's one thing sanctioning a pipeline that's not fully operational. It's another doing something about the existing flows of commodities back and forth. What kind of sanctions are you braced for later today?
I think that we're going to see very significant sanctions. I will expect that we're going to see sanctions on all major financial institutions in Russia. I will expect that we will have more sanctions on principals of Russia, including potentially President Putin himself. But the key question is all of this most likely was discounted already by the Kremlin. They knew that this was coming. They didn't care, or they were prepared to take the price. I don't think of any of those sanctions are going to surprise the Kremlin and are going to act. They will act as a punishment, and certainly they're going to be a strong punishment. The Russian economy is going to suffer, but they are not acting as a deterrent. They are not stopping Vladimir Putin for doing what he's doing, which is an invasion of a sovereign country, Ukraine.
So, Javier, we also need to work through the Western response just as far as how they can offset things too. Are you looking for a reserve release today? Are we waiting for an Iranian deal? What are the issues? A tax holiday here stateside? What are the issues you're focused on?
I think that all of those issues have been discussing right now at the White House and capitals also in Europe. I am expecting that we may see some progress on the Iranian deal over the next few hours. The main negotiator of Iran returned overnight from Vienna to Tehran from consultations, and a deal is expected over the next few hours if it happens. And certainly all the indications are that the White House is engaged in discussions about the use of the strategic petroleum reserve over the next few hours if needed. The price of oil has gone all the way up to $105 on Brent. It's around $100 for WTI. This is no longer a demand-driven, a recovery from COVID market. This is a market that is driven by fears of a shortage. But let's also remember that at this moment, and I emphasize at this moment, the oil flow continues. The pipelines from Russia into Europe are full, and they are delivering the oil every minute as we are speaking. And the gas pipelines, even through Ukraine, are also operational and are delivering the gas. And the European customers continue buying that gas, and they are paying for it.
How likely is it, Javier, for a response from OPEC, not OPEC Plus, but OPEC, in increasing supplies from Saudi Arabia?
I will in mind that Saudi Arabia is coming under massive pressure from Washington. It's the kind of language that I will in mind that is happening behind closed doors. That is the day where Washington tells the Saudis, you need to make your choice, is us or them. You are aligned with Russia in OPEC Plus, but you also have a strong relationship with the United States, with Europe, and across Asia, with many customers there from India to China to Japan. And I will expect that message has been delivered. And probably if something can calm the market right now, will be a statement from the Kingdom of Saudi Arabia saying that they are concerned with the prices and that they stand ready to act if needed. So far, we have not heard anything from Saudi Arabia, but they have a very difficult situation. They are an ally with Russia, and they are also an ally with the West. And they have the experience of fighting an economic war with Russia, actually. The Saudis fought a war with Russia, an economic war, and they know how difficult it is to fight that war.
Javier, good to catch up, sir. As always, just a fantastic piece earlier this week. Javier Blas, thank you very much. Lisa, we've got to sit on this for a moment, haven't we? You hear the words from the Russian president. He wants to demilitarize the country, replace its leaders. You hear the response from the West. But they're the numbers, just loud and clear. $700 million worth of commodity trading happening every single day almost between the US, the UK, Europe, and Russia.
We can't get away from the uncomfortable truth that we have not diverted our resources away from Russia and that we depend on them for our energy. And I'm talking about both the U.S. and even more so in Europe. In addition to that, we didn't get into this, but Halima Croft over at RBC put out a note basically saying that the international reserves of Russia are at the highest levels ever as a result of the higher oil prices. They have been preparing for this. So it really raises questions for what kind of shock and awe could actually bring them to the table in a more material way.
Well, that was Javier's point, Tom, that they have prepared for it. They've been running a budget surplus. They've been raising cash. They've been making sure they're ready for this over the last 12 months.
Yeah, the heart of the domestic structure for Mr. Putin, and I looked at this the other day, is per capita GDP is flatlined, John, I'm going to say in a broad sense over the last 10 years, even moved down. And the heart of the matter is maybe all of this is occurring because he's had the gift of $70, $80, $90 oil.
Brent crude right now, 105. Coming up shortly, June Tenuto, the global head of fixed income at Columbia Threadneedle. With futures down 2.5% on the S&P, the Nasdaq lower by 3.2%, and crude higher by 8%. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number. And most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
this morning, Russian troops invaded Ukraine, a free and sovereign country.
This is a deliberate, cold-blooded and long-planned invasion.
The United States, together with our allies, will defend every inch of NATO territory.
Today, in concert with our allies, we will agree a massive package of economic sanctions.
President Putin, stop your troops from attacking the Ukraine. Give peace a chance.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on Bloomberg Television, on Bloomberg Radio. An historic day, and it is simple. The headline from TASS late in the evening: Putin decides to conduct military operation in Ukraine. John, the speed of military operation is stunning.
Tom, things have changed. They've changed quickly. We're waking up to a very different Europe and very different objectives of this Russian president, perceived objectives. They've changed markedly in just a few days. The Russian president vowing to demilitarize Ukraine, Tom, and to replace its leaders. That's regime change as an objective. That's no longer just about separatists, Tom, in the Donbass.
We're monitoring it across all of the Bloomberg world of equities and, yes, of course, the foreign exchange market and such. John, what is the single statistic that shows the angst of international relations?
I've got to say, Tom, away from crude, the front end of the bond market, how that develops is going to be critical. That's underpinned everything we've seen year to date. A monster move at the front end, 2-year yields higher. Why? We've priced in more Fed hikes. What happens from here for this Federal Reserve? That's the number one question, I think, for market participants, for markets this morning. But markets for me, Tom, for you, for Lisa, secondary. The people of Ukraine, absolutely paramount. This is a very painful and personal story for the Ukrainians this morning.
The Financial Times mentions it is a war on 3 fronts. And Lisa, one of those fronts is identified by Blinken and Yellen tonight at 6:30 p.m. will be the response of Washington.
How do they deal with the fact that they want to defend NATO? They want to stick with their allies, but they still are importing oil. They want to deal with gas prices that are absolutely surging, and they're facing an economy that still has not fully recovered from the pandemic. How much do we get something further beyond just the sanctions that we're expecting? And do they go to that SWIFT banking issue and withdraw Russia from the international financial system?
Looking at the Black Sea as well, part of the story this morning. I want to look at the Haven data right now, John, to pick up on the general data. And the Haven data, folks, are just some of the things in the Bloomberg world we look at. It's very simple. Strong Swiss franc is confirmed off of 11 p.m. last night. We're down to a 103.12. A 102 print on Swiss franc against the euro would be extraordinary. And just to keep this short, John, ruble 85 is stunning.
Yeah, and some of the big trades more recently are just unraveling. I'm thinking of European financials, Tom, as we back away from this idea the ECB can tighten anytime soon. I wonder if that changes, but that's the perception this morning. Perception matters in the near term, of course, Tom. Banks are down in Europe really hard. SocGen, Deutsche Bank, BNP, UniCredit. Take your pick, Tom. They're down 9, 10%. There's a lot of pain in the European banking sector this morning with that bid into bonds, as you've painted.
And perhaps we will see comments from the Bank of England, the Federal Reserve, and, of course, the European Central Bank. They have been with us through the morning, and, of course, they're reporting late at night. Maria Tadeo in Brussels, as we've heard from NATO and from the EU, and Anne-Marie Horton in a Washington waking up to a new war. Anne-Marie Horton, what have you learned in your reporting at the White House in the last hour?
Well, very shortly, I just got off the phone with a U.S. official who says there's going to be a meeting on everything this morning. And then, of course, the president is going to come out and speak. So I imagine they're going to take the temperature and assess the situation, which is now a war in Europe, an invasion of Russia onto its neighbor, Ukraine. We have fantastic reporting on what's going on the ground. But what's here in the White House, what they need to decide is what are going to be those sanctions. Are they going to go as far as cutting off the world from Russian oil and gas? As you guys have been discussing, probably not. Are they going to go as far as SWIFT? Probably not. But these are the measures that would be the most extreme. What you're likely going to probably see is export controls that can hit some of these sectors as well, and a lot more sanctions. Right. Potentially what we heard last time, 2 of the more bigger financial institutions in Russia, VTB and Sberbank.
Marie, I want to pick up on that because I think this point you're making is really important. You went through the big sanctions and then said probably not, probably not. I'm trying to work out what it would take to trigger them. We're talking about a Russian leader. In his own words, he was vowing to demilitarize the country and replace its leaders. The latest report suggests this goes far beyond Donbass now. Anne-Marie, what would it take to trigger the strongest sanctions? When is it probably and not probably not?
Listen, I read a few months ago a fantastic article, and I can't remember who it was at the moment who was quoted on it, but said they'll have the Russians will get to Kiev before they enact and take them off of SWIFT. That's how difficult it would be unwinding Russia from this global financial system that has millions of transactions a day. It's like the Gmail of finance. And Alexei Kodrin, who is very close to President Putin and was a one-time finance minister in Russia, had said in 2014, when this was floated, of course, when President Putin recognized Crimea as a separatist state, 24 hours later, he annexed Crimea. This was floated, and he said this would wipe off about 5% of Russian GDP a year, and that was 2014. But the problem with SWIFT is that it will not just be painful for Russia, it will be painful for Europe, for America, and the entire world.
Maria, that's where I wanted to go. Have you heard a shift in tone among the European leaders as they convene in terms of how much pain they're willing to take in the scale of oil prices and gas prices surging?
Well, this is such a difficult question to answer, because when we say Europe, what do we mean? We have 27 countries that will have to agree on a package today when they meet in about 5 hours' time here in Brussels. When you speak to the Baltics, they say we should have gone nuclear. We should have gone for the big sanctions already on Monday. We told you this was not about Donbass. This was about the future of Ukraine and taking ownership of the capital. And by the way, we know now that there is heavy fighting in Odessa. We know there's heavy fighting in eastern Ukraine, and there's heavy fighting going through Belarus. Remember, that's the fastest way into the capital where the Zelensky government is sitting. We do know also, by the same token, that countries like Italy, they say we worry about what this does to luxury goods. I feel silly saying this, talking about luxury goods on a day like today, but it does have an impact on their economy. The Germans also say if we go full on tonight, does it guarantee peace tomorrow? Probably not. We see that Vladimir Putin is not a rational agent at this point.
Well, we're moving at light speed. It'll be amazing to see where we are in 24 hours. Anne-Marie Horton, I have an incredibly naive question, and you are so good at answering my dumb, innocent questions. Is a U.S. soldier or sailor different as a U.S. soldier or sailor, or as a NATO soldier or sailor?
I know what you're getting at, Tom, and what the president has said repeatedly is that he would not send U.S. troops to Ukraine. He will send U.S. troops to NATO to bolster the NATO flank, right? But when you're talking about NATO, you don't put on a NATO uniform if you're an American soldier. You go there as an American and you work alongside your NATO other allied countries, Germans, France, etc. What you're likely going to be seeing is still more swift movement of American soldiers that are there for NATO bolstering, that are places like, say, Greece or Germany, moving to the Baltics, to Lithuania, to Latvia, to Estonia, and primarily Poland. Poland is now going to be potentially a new contact line between NATO and Russia.
Anne-Marie, excuse the language I'm about to use here, but is there a list ready to go to pull the trigger on for sanctions? Is there a list ready now, given what's happening, or are they having that debate still?
No, I think there's a list. There has to be a list, right? They have been, the United States has been, and you know, to their credit, the intelligence was absolutely correct. This was not just going to be about Donbass and eastern Ukraine so far and what we're seeing in the movement in Ukraine. This is about potentially the entire country and moving past the Donbass, past eastern Ukraine, which President Vladimir Putin in 2008 said it was always supposed to be part of Russia. There's definitely a list. They are probably just fine-tuning it. And we can say that because when they put the first tranche over, tranche one, which pretty much now, that's it. There's no more tranches. This is going to be it, right? They have to come swift out today or their word is going to be lost. But even when we ask them questions about that, why didn't you go harder on this financial firm or, you know, sovereign debt, many were already expecting, et cetera, they started to talk about what the next actions were going to be. So they are probably just going through a fine-tooth comb of what it's going to be. But we should note it would be the most instrumental thing they can do that would actually inflict pain and potentially stop President Putin would be cutting off, sanctioning oil and gas the way the United States has done to Venezuela and Iran and cutting Russia off of SWIFT. That is unlikely to happen.
Just real quick here, are we expecting an announcement either later today or tomorrow about a further release of oil reserves in the U.S.?
Potentially. I mean, when you're talking about Brent north of $100 a barrel and WTI closely in on that, this is something that was always in their toolbox. We can tap the SPR again. You're probably going to hear, if they don't do it, hear the fact that they're drawing up plans to, and they're also going to be in touch with other producers and consumers around the world, and not just for oil. Of course, LNG is going to be huge to secure Europe for the remainder of the winter.
AMH, stay close. We'll be catching up a lot through the next several hours. Anne-Marie down in DC, Maria Tadeo out of Brussels. Maria, thank you. Want to look at one part of this market, just lift the lid on the index just for a moment and look at the airlines. This is not pretty. The airlines are down and down hard. Delta off by 5.6%, United down by 5.7%, American down by 5.5%. It's going to get more and more expensive, Tom, to meet that demand.
It is. And what's important here, John, is a market move. And to be honest, when Anne-Marie mentions Brent crude at 105, my question is, why aren't we at 118 right now?
Well, Lisa asked the same question.
But to me, John, the big question here, and for our viewers and listeners, is to understand the rate of change we've seen in the last 6 hours. That's what's not being reported, is the military rate of change of Russia linked into market rate of change.
So there's some two-way risk here, Tom, that I think we should emphasize. The escalation we're seeing right now is one way, upside risk to crude. There is downside risk here too, the potential for a deal with Iran and other measures as well. JP Morgan, that's their base case. We'd get this escalation, one, and two, we'd also get an Iranian deal, and they see crude at 110 in Q2 22. I'll go through the numbers a little bit more a little bit later. Futures are down by 2.6% on the S&P. On the Nasdaq, we're down by 3.4%. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russia has begun a full-scale invasion of Ukraine. The country is being pounded by a barrage of missile, artillery and air attacks, and Ukraine has reported dozens of casualties. Russia's President Vladimir Putin is vowing to, in his words, demilitarize the country and replace its leaders. In response, the U.S. threatened further sanctions. President Biden will speak to the nation after a virtual meeting with other G7 leaders. And Bloomberg's learned that the Biden administration may tap its emergency supply of oil again in coordination with allies. The price of oil surged past $100 a barrel for the first time since 2014 after Russia's attacks in Ukraine. Japan and Australia indicated they might also release crude from their reserves. And the Russian invasion is jeopardizing the chances of reaching an agreement with Iran on its nuclear program. World powers at the negotiating table find themselves on opposite sides of Europe's biggest security crisis since World War II. Envoys have suggested a successful conclusion to the talks could be just days away, but the US and Iran still have to resolve some key differences. And separately, Moderna posted fourth quarter sales and profit that beat estimates. The drug maker said it has signed $90 billion in orders for 2022 sales of its coronavirus vaccine. That's up slightly from the amount announced back in January. Moderna is racing with rivals Pfizer and BioNTech to ramp up production and sell its COVID shots around the world. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
President Putin, in the name of humanity, bring your troops back to Russia. In the name of humanity, do not allow to start in Europe what could be the worst war since the beginning of the century.
Really powerful words from the Secretary General of the United Nations from New York City this morning. Good morning to you all. Futures are down on the S&P and on the Nasdaq too. On the Nasdaq 100 by 3.4%, on the S&P by 2.7%. Your Nasdaq is staring down a bear market right now. Treasuries bid, yields lower 11 basis points to 187.67. Crude briefly through 100 on WTI, still there on Brent. 99.43 on WTI, up 8 percentage points. This slide from Evercore. I think typically in markets, people looking to fade a move like this morning, Tom. There is a feeling this morning, though, that this geopolitical shift is more than just a small geopolitical shift. We're waking up to a very different Europe and trying to work out what that different Europe actually looks like over the next several years now. This is the line from Evercore, Tom, on why they don't want to fade this and why they're not ready to at the moment. Quote, the way that the stagflationary energy shock combined with sanctions disruptions will complicate the ability of central banks on both sides of the Atlantic to engineer a soft landing from the pandemic inflation surge. That challenge for these central banks got a little harder, a whole lot harder this morning.
Brilliant. And the key word there, folks, is the word engineer. And that, John, we're talking about what is the response to what, as the way Lee of BlackRock said, is a regime change. And what I would emphasize, John, is to look at the constraints, the immovables within the potential engineering. One immovable geographically, the Bosphorus Straits off of Istanbul. John, you've mentioned the other immovables of hydrocarbons in Europe, which are way more up on. I mean, John, what does a gas bill do 55 miles north of London?
I mean, can we find what the gas prices look like this morning, Tom? I mean, take the European benchmark. Look to Dutch prices at the moment.
The TZT, yes.
Well, more than 30%, Tom. Intraday, today, this morning.
Yeah, the intraday price on the Dutch, it's a Dutch pricing. And of course, we had Kona with us earlier on wheat as one example. Let us get back to what we do, which is financial instruments. And we do this, thank you for that. On radio, we're looking at the explosion in price of Dutch natural gas. Let us go to what we do with Gene Tenuzo, Global Head of Fixed Income, Columbia Threadneedle. Gene, how do you change and adapt to be opportunistic in the yield space? What do you do or not do on an historic day like this?
Yeah, it's a good question, Tom. And, it's certainly a challenging environment, but I think we have to look back and appreciate how much the environment has changed from a valuation perspective in the last year and a half. If we were sitting here in August of 2020 and we would have said that interest rates would have quadrupled on the 10-year Treasury from then until now, and stocks would have been up over 60%, at least as of the end of last week, I think we would have said, look, this is a time you're supposed to be adding more fixed income exposure. In the heat of the moment, I think the market had been looking the other way because the focus over the last 6 weeks has been front and center, the Federal Reserve, and accelerating their tightening path. But I think we're in a situation now where there's very much two-sided risk in the bond market, and we're seeing that today when there are downside shocks, yields have plenty of room to go lower.
What is the partition today on an historic day like this between full faith and credit and true credit market? What are the dynamics different between government paper and corporate paper?
Well, certainly credit risk is weaker this morning when we see environments like this, but the starting point of fundamentals is actually quite strong. We can see that both on the consumer and the corporate balance sheet in the U.S. And it's been amazing that through this inflationary environment, particularly large corporations have been able to maintain margins. So the starting point is exceptionally strong. The cost of capital for these businesses remains exceptionally low. So I actually think the vulnerabilities are not as large as they might seem on the corporate side right now.
That said, Gene, what we're seeing right now in markets and beyond, frankly, from a geopolitical standpoint, is shifting the narrative quite a bit. We're hearing a lot of discussion about stagflation. We're hearing a lot of discussion about whether the Fed can engineer a soft landing, which is how we began this segment. Do you think that it looks practically impossible at this point, given the price of oil, should oil stay where it is?
Well, it's not impossible, but this is a stagflationary shock. And we need to think about how a central bank will react to that. And I think to understand that, we need to understand the transmission mechanism of monetary policy to the real economy. And that transmission mechanism, as we've learned time and time again, is through financial conditions. So financial conditions really manifest themselves in three ways. It's access to capital for consumers and companies, it's asset prices, and it's animal spirits. Access to capital is still there, given the strength of the balance sheets we've talked about, but that can change quickly. Animal spirits are starting to change, and we can see that with the consumer confidence data that we got earlier this week, not to mention what markets are pricing in. And asset prices have already adjusted meaningfully. So two of those three pillars are going to have a real negative impact on growth. And in a way, it's doing the Fed's work for them. So even though oil prices are up today, the Fed, unfortunately, just can't control that. It can't obsess itself with trying to bring down oil prices.
Gene Tenuzo, thank you so much with Columbia Threadneedle. Michael McKee will join us here in 7 minutes on economic data within an unusual time, and he'll give us his wonderful perspective. He has done political economics at Bloomberg since time began, and he joins us this morning. And I go back, Mike, to your time of Gorbachev, and then there were two leaders, and then suddenly Yeltsin. You've lived the regime change of Russia. How do the Russian people react after Gorbachev and Reykjavik and all that, and what you experienced very much in our political discussion? How do the Russian people react to Moscow?
Well, this time it's going to be much different, I think. When the Russian Revolution came in 1991, I spent a lot of time in Moscow and in Russia, and the Russian people were very excited because they saw a change in their economic fortunes coming for the better, and for a number of years that happened. But now things are going to get worse. The issue for the Russians is that Vladimir Putin has basically eliminated the opposition as a public thing, and so it's hard for them to rally around much.
Can you imagine the IMF spring meetings? They'll be original, won't they?
Well, let's see how long this goes. A lot of this is going to depend on what happens. We're in the fog of war, and by the time the IMF comes around, we can hope that this is over and that there is some sort of positive outcome. But right now, it's too early to say. If indeed this is still going on, the sanctions that are going to be introduced, the price of energy is going to have a major impact on the global economy on various parts of it. And so that would be the chief topic at the IMF.
Mike McKee, thank you. Tom, stagflation becomes a real conversation. Have you seen this move in real yields today? On 10s, we're down about 26 basis points. On 5s, even more. Well, I think for the bond market at the moment, Tom, that's where the focus is.
Yeah, seismic shifts with SPX futures negative 117 deteriorate for the worst in hours. Dow futures negative 855. And John, I mean, it's just, again, I would just say the speed of change of the military operations directly affecting what we see in the markets.
The window to engineer a soft landing for many people was already really, really small. And this morning, it gets smaller. Futures down 2.8%. On the S&P, on the NASDAQ, down by 3.5%. We're staring down a bear market for the NASDAQ 100 from New York City. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
that capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Breaking economic data moments away, and for some of you this data feels very dated. Futures down by 2.74% on the S&P, on the Nasdaq down by 3.5%. With your economic numbers this morning, it's Mike McKee. Hey, Mike.
Good morning, John. We're looking for jobless claims, and they've just come out 232,000. That's a little bit less than forecast, and it's down from last week's original estimate of 248,000. We're also expecting GDP to come out. It's just dropped the second reading on GDP, 7%, which is unchanged, which is a tick higher, than the 6.9% originally reported. We'll have to see whether that was consumer spending that actually went up or inventories, probably a little bit of both. We're waiting for the GDP price index. That's what's going to keep everybody's attention these days as oil prices skyrocket. And as you mentioned, we're kind of in a situation where the data don't matter now. It's what happens going forward, and particularly what happens in the commodities markets.
I just wonder what matters going into March 16th now, Mike, and how any of this changes the Fed. You're the master of the Fed speak, so let's work through it. Lisa went through how many Fed speakers we've got today. How many Fed speakers, Lisa?
I don't know, 25?
I mean, I've lost
like
count.
6.
Something like 4, 5, 6. Yep. Mike, what are you looking for?
I think they're going to say exactly what they can say, which is nothing. They are going to have to say, we don't know. We're in the fog of war, and the one thing you know about the fog of war is what you know is probably not correct. So it's going to take them some time to get a real picture of what it's going to mean for the economy, and a lot of that will depend on what kind of sanctions are introduced by the U.S. and the Europeans. If it is a matter of rising oil prices, then the Fed is probably going to look through that. They don't want to be easing into an oil crisis as they did in the 1970s. Same with the ECB. The issue then becomes, is it a growth story? And if it's a growth story, then they've got a little bit harder decision to make, probably slow down, shall we say, the pace of rate increases. The ECB probably pushes back the timing of rate increases, but I don't think at this point any of them are likely to add stimulus. It's more a question of damage mitigation, and that'll depend on what tack that takes, whether it's growth or inflation. If it's both, you mentioned that, then they got a problem.
Mike, we definitely feel a little bit at least humbled by talking about Fed policy on a day when we're facing off with a humanitarian crisis over in Ukraine as the invasion does continue to escalate by Russia. I am looking right now, though, at the economic fallout with the initial and the continuing jobless claims in the United States falling to the lowest level since the 1970s. How much can we see a stagflationary environment with an employment market that's as hot as it is?
Well, the employment market can turn, Lisa, and that's the question for the Fed. Do we see a slowing in demand? And the odds are we don't see a huge impact at this point because the United States is relatively isolated. But supply chain problems could push up inflation, which could, and energy prices, of course, which could then put a damp on consumer spending, maybe business investment. And then what do? Raising interest rates or lowering interest rates is going to just make the situation worse, probably. So if you had to bet on anything, it might be that the Fed slows down to watch what's going on.
Mike McKee, thank you, as always. Tom, this whole curve, 2s out of 30s include 10s and 20s, 3s, 5s, and 7s, just drops by more than 10 basis points.
Very fluid here, folks. Some real movement in the yield space. And, of course, we look at compare two yields there as well. And that ruble is weakening right now, not through weakness shock of 11 p.m. last night, but nevertheless, markets on the move. We adjust, as does Morgan Stanley Economics. Robert Rosen joins us now, senior U.S. economist. Robert, Steve Englander over at Standard Charter has been resilient before this historic moment of the 5, 6, 7 rate hike team may be a little bit off the mark. Do you adjust back down to 3 rate hikes this morning?
Well, thanks for having me, Tom. We still see the Fed on track to raise interest rates in March by 25 basis points. But of course, there are now an increased degree of uncertainty in the economic outlook. So the Fed has to weigh what they're seeing in terms of domestic economic conditions, the strong labor market, the resilient consumer, and then the inflationary backdrop. The Fed has to weigh that against the potential risks to the economic outlook going forward.
Let's go back to McChesney, Martin, and Truman into Eisenhower of the Korean War. Is this a point where the White House says to Chairman Powell, look, we really need your help. This is what we'd like you to do?
You know, the Fed will maintain its independence in monetary policy, of course, but the Fed has to ask important questions. And this is not the first time that the Fed has had to grapple with domestic economic conditions that might call for rate hikes, but international conditions that present some potential risks to the economic outlook. So that's a lot to weigh there. It does make a case for caution. So it helps the Fed with the debates we were having in recent weeks about 50 basis points or 25 basis points in March. It makes that decision a little bit easier, but the Fed doesn't want to get caught back-footed if risks to the economic outlook don't prove to be as significant and they still have to deal with inflation.
Rob, are you ready to use the S word yet? Stagflation. Are you and the team there yet? Is it part of the conversation for you?
I don't think we're there yet. This is certainly a type of financial condition shock that pushes inflation and activity in opposite directions. Oil prices are going to put upward pressure on headline inflation. That adds to the multitude of inflationary shocks that we've been seeing in recent months. And of course, it can have a negative effect on economic activity. But you look at the way the labor market is today, I know that can turn, but I think we've been surprised time and time again about the resilience of the labor market and the resilience of the U.S. consumer as remaining the heartbeat, really, of this economic expansion.
What's the red line, though, for oil prices? Do you have a sense, Rob, of how high oil prices can get before you start talking about a material downshift in the pace of economic growth?
We are certainly seeing the effects of oil prices on consumer wallets. We're looking at, every 10-cent increase in retail gas prices is about a $10 billion annualized hit to consumer budgets. And that has been adding up. It's been stacking up, and it's been stacking up with other inflationary pressures. We've been seeing real wages in the red for most groups, save for the lower end of the wage spectrum. If energy prices keep creeping up and they keep real wage growth in the red, then I do think that's where you start to have to get a little bit more concerned about the pace of consumer activity when we're looking at the second half of the year.
Is there a precedent for how quickly the economy can shift in response to a shock like this, given all of the dynamism, all of the strength that you've been talking about that we're seeing in corporate balance sheets and beyond?
Yeah, absolutely. I mean, things can certainly turn fast, but again, it comes down to where are the fundamentals and where is the heartbeat of the economy, and that's the labor market. And we've seen job growth with incredible momentum, aggregate incomes growing strongly, wage growth at the individual level still growing strongly. So there's still a lot of positive tailwinds in place to keep the domestic economic expansion going strong this year. But of course, things can turn fast, and when they turn fast, it tends to be transmitted through those financial shocks, through uncertainty. And we've seen how the Fed has been responsive to developments like that very quickly in the past. So, pivoting style that we've seen from Chair Powell, likely to remain in his toolkit.
Do we rationalize, Robert Rosner, that if inflation is 100 basis points higher than expected, or critically, the timeline is extended out of a longer inflation? How do the PhDs at the Fed adapt to that?
It's a really tricky question, Tom, because typically the knee-jerk reaction is you look at an energy price shock and you think of that might be the T word, transitory, right? But it's occurring against this backdrop of a multitude of inflationary shocks, and we do have to start to get concerned about what that could mean for the path going forward. But again, it pushes the dual mandate in opposite directions because you have energy prices now lifting inflation, but also you have to be watchful for the downside risks for activity that could potentially have down the line.
Rob, wonderful, as always. Difficult
Robert,
moment for you
thank
and the team, and I imagine you're going to be talking all morning about what this means for next month. Rob Rosner there of Morgan Stanley. If you're just tuning in, Here are the moves. We're down 2.5% on the S&P going into the opening bell. Futures on the Nasdaq down by more than 3 percentage points. Staring down a barrel here of a bear market on the Nasdaq. That was building up coming into this. The fears around higher interest rates, and then you introduce geopolitics and higher crude and the uncertainty. I would say right now, Lisa, almost maximum uncertainty on what this means for central bank policy. With crude at the moment at 99.73, up by more than 8%.
Is oil inflationary or disinflationary when prices start going up? And I think that that is the main question underpinning a lot of the moves and a lot of the uncertainty around Fed policy and, frankly, the ECB. It does increase prices, but does that also decrease demand in a commensurate way? And what does that mean for how much they should increase rates this year?
So real yield to lower, Tom. Break-evens breaking out. I think 5-year break-evens are the highest ever on a 5-year. That's the surge. Remember when we came into this year, this was meant to be the story. It was time to bet against inflation and bet on higher interest rates. Tom, that story's taken a big setback in the last week.
There has been a regime change today of that story. And John, I would even suggest the story of 2 or 3 days ago has changed as well. And it's all, to use the calculus phrase, the first derivative here is out of control right now. John, it is 3 p.m.-ish. In Europe. They will go into the dark here in a moment. I don't know how you prosecute war at night, but we may see those images here in 6 or 7 hours.
And so much of this has been building now for a long time, over much of the last 12 months, and even longer for the historians, decades. The words of Vladimir Putin, perhaps not surprising, Tom, but shocking, deeply shocking and dark, to hear the Russian president say he is vowing to demilitarize the country and replace its leaders. That's what we're waking up to this morning worldwide.
Yeah, to tell everyone here, as you listen and watch, we will continue through the morning, John Farrell, Lisa Bramwitz, and myself, and we'll go over some of the themes of 6 o'clock. But John, those themes of 6 o'clock have changed just in the last 3 hours.
So special coverage in the next hour. Tom, Lisa, and myself will guide you through the opening bell. Then we'll take you through to midday. I guarantee you, going into the opening bell, commercial 3 from 9 to 9:30. Tom, we haven't told the producers that yet, but now you know. Futures down by 2.6% on the S&P, on the Nasdaq by 3.2%. The perfect guest on this equity market at this time, Mike Wilson of Morgan Stanley, 9 o'clock Eastern Time, 20 minutes away. Don't miss it. From New York, this is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Rishika Gupta. Vladimir Putin says the U.S. and its allies have crossed a red line, so he has begun a full-scale invasion of Ukraine. Russia launched a barrage of missile, artillery, and air attacks early Thursday. Ukraine has reported dozens of casualties and says the capital, Kiev, was under attack. President Biden is threatening to impose more sanctions and will speak after a virtual meeting with other G7 leaders. And NATO is continuing to deploy more land and air forces to member countries near Ukraine. The alliance will hold a virtual summit Friday to discuss its reaction to the invasion. The Biden administration has repeatedly ruled out sending U.S. or NATO forces into Ukraine. The 4 major precious metals all rose after the Russian attacks. The action boosted demand for gold, silver, palladium, and platinum. It also potentially threatened supplies. The world's largest beer maker, AB InBev, forecasts that earnings growth will decelerate from a bumper pace in 2021. The Budweiser maker forecast adjusted earnings growth of 4 to 8% this year. Profit rose 12% last year, rebounding from the pandemic. And Citigroup wants its employees to come back to the office. It's calling vaccinated staff in the U.S. to return to offices for at least 2 days a week, starting week of March the 21st. For months, Wall Street banks have pushed for employees to come back to workplaces that were emptied by the pandemic. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
It sends a strong message to Putin, but it still doesn't stop him. So it means we need more sanctions, we need the second wave, and then probably the third wave, until it gets clear to him that he shouldn't make any step further.
That was the Ukrainian foreign minister. Yesterday evening, things have changed. Changed quickly. From New York City, with futures lower by 2.4% on the S&P, on the Nasdaq down by 3 percentage points. Yields in too, Tom, down 13, 186.29, and crude lower. Much lower, higher rather. Let me get the commodity board up, Tom. I don't know what the VIX is doing there. Crude looks like this. WTI up 7.8%, 99.33. Brent up by 8 percentage points, 104.70. That's a big move, Tom, in crude this morning.
Living here with a dearth of headlines in the last 20 minutes as we go into the afternoon. We'll have to see how that works. John, very quickly here, Kathy Jones of Schwab with the financial chart of the day, and this will cover everything we speak to, including our next important guest. And that is, John, the chart of the Bloomberg financial conditions, which is dramatically adjusted to being less accommodative and the market's leading more restrictive financial conditions.
Are you ready to say tighter, Tom?
Tighter.
Or less accommodative?
Kathy
Jones. They're different. Less accommodation versus tight.
Yeah, there's no question about it. And that leads, thank you, Kathy Jones of Charles Schwab, for using the Bloomberg, to the great Stephen Englander. He is arguably the best cross rates guy in the world, G10 FX Research, Standard Charter. Stephen Englander, is this a moment where the rest of global Wall Street has joined your outlier of fewer rate hikes?
Well, I think for the time being, I think the current conditions make it far less likely that they're even thinking about 50. And Mary Daly yesterday was, alluded to that possibility. Financial conditions are tightening. Risk is off. I think the Fed will be worried about shocking markets. And I think that all global central banks will try and avoid shocking markets. Doesn't mean that they don't hike, but it means that they're going to throw the ball straight down the middle and try to avoid surprises.
Where's the shock, though, Steve? I mean, at this point, when you see inflation at such a high rate, when you see an employment market that's as robust as it is, how does it shock the market to kick up interest rates, overnight rates by 25 basis points?
Well, that's not a shock. I mean, but I'm saying if they did 50, that would be, or if they did something else unexpected, I think that they'll be very conventional and explicitly so.
One thing I've been noting is the flight to havens. I know you've been focusing on this as well, and it's pretty marked, particularly in cash-like instruments, with 1 month T-bill yields actually turning the most negative since March 2020. Are you seeing any signs of dysfunction or illiquidity pockets of at least fissure as people try to readjust in such uncertainty?
So far, not really. It's nothing like 2020, and you would see it if you began to see treasury yields going up unexpectedly for some reason. I think, if anything, markets have been very well behaved in terms of absorbing this.
Stephen Englander, Kitchukes at SocGen, who you know well, remodels a euro weaker to 109. What are the ramifications of weak euro, and how does that change the dialogue for Christine Lagarde?
Well, I think Europe is almost a frontline state where it comes to this. Mm-hmm. So I think that if risk conditions really deteriorate, there's downside possibilities. You can't avoid that. We like the euro, but pre-invasion, the case was much stronger. I think that she will try again to avoid surprising the market in any way. She has the advantage in that she doesn't actually have to make a move. She can talk about timing of moves that are 5-8 months in the future. So, I think she'll just be very, very cautious.
How do the markets react to an Englander world? I would suggest, Steve Englander, that a wide body of global participants have framed a much more restrictive set of central banks. You have pushed against that for months and months and months. Where will we see big figure changes that can be opportunistic in this time of war?
I think that there will be a very distinct north-south divide in the sense that lower rates or expected yields in the U.S. are because of higher perceptions of risk. Same in Europe. Probably not great for activity because what you get from the yields, you lose from the risk aversion. Whereas I think Southern Hemisphere commodity exporters, not in the line of fire, everybody's demanding their products. Once things settle down, both in the EM and G10, I think those currencies will do very well.
Steve, as we speak, there are people hunkering down in Kiev trying to protect themselves and their families from the attacks that are now oncoming from the Russian invasion that we do keep hearing and getting headlines for. As we look forward, it seems unlikely that we're going to see a rolling over in some of the inflationary inputs, not only oil, but commodities more broadly, with Javier Blas talking about how we have never before seen all commodity sectors really rising in tandem in response to some sort of shock. How much does that feature into what the Fed does? How do they message a more dovish tilt than markets are currently pricing?
Well, you can think of this as yet another supply shock that's hitting. And I think it means that they will be somewhat cautious. I mean, at the end of the day, you have to respond to a long-term supply shock by getting demand in line with supply, but you don't have to do it overnight. So I think that they will be very careful to gauge, what's coming back, what's the new normal, and adjust their rates policy to hit that, wanting to get inflation back down, but not being sure how much the potential slowing of the economy is going to do the job for them. So I think it makes them more careful, it slows things down.
Steve, wonderful to hear from you, sir. As always, Steve Englander there of Standard Chartered. Tom, let's refresh and reset and talk about where we've been. Waking up overnight to tanks rolling into Ukraine. Some very strong words from the Russian president who vowed to demilitarize the country and replace its leaders. We started to learn pretty quickly, Tom, it was more than just about the separatists and the regions there in the Donbass. It was more than just about that. And the headline that broke several hours ago, the Russian military vehicles breached into the Kiev region, certainly got the attention of us and the market as well. Futures near session lows. Now it's about the reaction from the West, Tom. They've talked the talk, now they've got to walk the walk. We understand the president convened a meeting of the National Security Council this morning in the Situation Room to discuss the latest developments. We understand also, Tom, we'll hear from the president a little bit later.
And we're going to hear as well what will happen day two. Not only what will happen for Mr. Putin day two, but for the allies as well. We mentioned troops going to the north to the Baltic states. I believe that was reported a number of hours ago. John, in the financial world, what I think is stunning, and I have been remiss on this morning, is the movement in the real yield is a massive 5 standard deviations just since Valentine's Day. I mean, the readjustment of the real yield to a new regime is the headline financial story today.
It's a big move, Tom. It's a big move lower. And Lisa, the move in break-even's just out the other way, breaking out in a big way.
And this really speaks to the conundrum that the Fed will have, that the ECB will have. Inflation is going to rise in the short term and possibly very much so on the heels of what we're seeing in oil prices. Do they respond to that by getting more dovish?
So we're going to be sticking with you, Lisa, Tom, and myself, through the next hour into the opening bell, commercial free. Joining us, Mike Wilson of Morgan Stanley, Elise Ossenbar of JP Morgan Private Bank, and Neuberger Berman's Eric Knudsen to get your hands around what all of this means for this market. From New York City, for our audience worldwide, this is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From New York City,
in London, in Sydney, in San Francisco,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Live from New York City for our audience. Special coverage with Tom Keane, Elisa Abramis and Jonathan Ferro. The countdown to the Open starts right now. From New York, we begin with the big issue. Russia invades Ukraine. President Putin delivering a warning for those standing in the way, saying, quote, whoever tries to interfere should know that Russia's response will be immediate and will lead you to such consequences as you have never experienced in your history. The Ukrainian president declaring martial law while urging calm during a brief video address saying the following: we are strong. We are ready for everything. A minute ago, I had a conversation with President Biden. The US have already started uniting international support. The US quickly condemning the attacks. President Biden writing in a tweet, Russia alone is responsible for the death and destruction this attack will bring. And the United States and its allies and partners will respond in a united and decisive way. The world will hold Russia accountable. Team coverage starts right now. Maria Tadeo from Brussels, Anne-Marie down in D.C. Anne-Marie, the latest, please.
The latest that the president, Jonathan, has convened his National Security Council, his team in the Situation Room, and he's been watching this moment by moment. And then, of course, we're going to hear from the president himself at some point in the afternoon. We do know that overnight he was engaging with President Zelensky. He took to Twitter to let us know about that engagement. He said, President Zelensky reached out to me, President Biden speaking. We just finished speaking. I condemned this unprovoked and unjustified attack by Russian military forces. I briefed him on the steps we are taking to rally international condemnation, including tonight at the UN Security Council. And Jonathan, that has been the tone from the international community over the course since President Putin made that speech just before 6 a.m. in Moscow.
Maria Tadeo, sanctions will only get you so far. We heard earlier this morning of troops to the Baltic states. Brief us here on what NATO will do militarily in the coming hours.
Well, Tom, what we know is that NATO has said this is now a brutal attack of war on Ukraine, that this is completely unjustifiable. And of course, we'll be deploying troops into the Baltics in particular. We'll talk about Lithuania, Estonia, and Latvia. But the key here is, what about Ukraine? Ukraine is not a member state of NATO. They do not belong to any military alliance. And when I speak to my contacts in Ukraine, they say, we know full well nobody's going to fight this war. This will come down to us. And what we need right now is weapons and facilitation of weapons. If NATO can do that, if the European countries can do that, if we can get them quickly, particularly through Poland, then that's what we need at this point.
Maria, I'm not going to go over the untranslated comments of Mr. Putin, but there was his discussion, the romance he perceives back before his birth in the early 1950s to World War II, where he mentioned Nazi Germany twice directly in his language. How will Germany respond to that?
Well, what Germany's saying is that that is a complete revision of history that has no place. They remind everyone, by the way, the government in Ukraine was voted, and you can criticize, and we should, the Ukrainian government. So we could argue that for years they've done no service to the Ukrainian people. There's many endemic problems in that country, but the government of Volodymyr Zelensky was voted for people. By the way, when he's called a Nazi, he just went on TV to say, well, I'm Jewish. How can you tell me to my face that I'm a Nazi official? Now, the question will be now, what does Germany do in terms of the sanctions? We know that they have a huge voice in Europe. We know there's been debate throughout this morning, but I have to tell you, Tom, the mood here in Brussels has changed over the past 20 minutes. A lot of this has to do with the reports of fighting near the capital of Ukraine. And I hear from more European officials that are saying we need a big package today, and perhaps again the debate about whether or not Vladimir Putin should finally be on that list.
And Marie, we're talking a lot about sanctions. We're not talking about troop presence. We're talking about protecting NATO land, not necessarily Ukraine, which is not part of NATO. Has that conversation shifted in Washington, D.C. in terms of adding some troop presence to NATO in some of the surrounding nations?
So on the first point of whether or not there'd be U.S. military presence in Ukraine, that conversation has not shifted at all. But I imagine you will hear the president say that he will continue to defend NATO land, and that would mean potentially continuously to bolster the eastern flank. But this is not new. They have been doing this over the course of weeks, as the U.S. government has been very forthright and very transparent on the intelligence they were collecting on President Vladimir Putin's plans that have pretty much come to fruition today.
Maria, a lot of people have been saying that we really were not prepared for this type of outcome, that people were expecting Vladimir Putin to move more slowly and do more saber-rattling than actual actions. Can you give us a sense of the tone, how surprised European officials have been?
Well, it depends who you ask. When you talk about Europe, there's 27 different voices. I did hear officials who used to argue, well, the United States at this point is sharing way too much. A lot of this is creating hysteria. We see today that, by the way, the U.S. got this spot on. But when I speak to Baltic states, particularly Lithuania and Estonia, they've said and they've told me for weeks, this was not about the Donbass. If you read particularly, they keep pointing to this essay that Vladimir Putin wrote last summer where he said the collapse of the Soviet Union is the biggest tragedy our country ever went through, and the idea that an independent nation state, Ukraine, closer to Europe, that is an abomination of history. They always said this was never about the Donbass. This is about changing a regime in Ukraine that will be a puppet government for Vladimir Putin. And by the way, the Russians don't make a secret of it. They say it today, want to remove the government.
Tom, just getting a headline from Senator Manchin, who says the U.S. must impose crippling sanctions on Russia. Tom, the question I would ask is, can you impose crippling sanctions on Russia without crippling Europe?
Well, no, there's a SWIFT system in the financial transactions of hydrocarbons involving millions and millions and millions of dollars. The answer is you can't do it. And Maria, I think that goes to waking up in 18 hours or whatever to day 2 of this Russian action. We are surprised by the speed of their movements. Is there any discussion of their movement west of Kyiv?
Well, what we know is that the whole attention is based on the capital for 2 reasons. Of course, this is the biggest praise. This is also a propaganda war. For Vladimir Putin, it'd be great to say, look, here we are. It took less than 24 hours to get to the center of the country. The other issue, Tom, and this is very important, is that what happens if the Ukrainian government somehow falls in the hands of the Russians? I don't want to speculate, but you can imagine the many scenarios that could open at that point. And for the Europeans, if Zelensky is not there, then who do you speak?
AMH, work with me here. These numbers from Javier Blas of Bloomberg Opinion earlier this week. In a single day this week, this is the US, the UK, the EU, likely spend close to $700 million in a single day on Russian commodities. He goes through it point by point. $350 million worth of oil and refined products, another $250 million worth of Russian natural gas, millions on aluminum, coal, nickel, titanium, gold, take your pick. AMH, this is the issue for Europe, for the world. They've stayed on the page so well over the last several weeks. They've kept that unity. When Senator Manchin says crippling sanctions, I'm just wondering where the offset comes from the Europeans, the dependence on Russian commodities. Anne-Marie, where's the offset coming from?
It's a huge dependence on Russian commodities, Jonathan, and not just all of those base metals and oil and gas, fossil fuels, wheat as well. This is a huge potential, if they're going to sanction these products, inflationary story that is going to backfire on the United States and on Europe. Where can you get other fossil fuels? Well, if it's going to be oil, there's going to be a call to Saudi Arabia to pump some more. And then if it's natural gas coming from Russia, which is much cheaper, you can get LNG from the United States, Qatar, and some other regions, but it's much more difficult. But we should note, the one thing that could happen, which could be an argument for this administration to not sanction Russian oil and gas, is that if you were to do that, what would the price of Brent be right now? I would argue $150 to $200. If you take that price, President Vladimir Putin could then usurp the sanctions, send his fossil fuels to China, and make a tremendous amount of money on an increased price that will only hurt U.S. consumers.
Emery Horton in Washington will continue through the morning with her, and Maria Tadeo in Brussels as well. It is Bloomberg Surveillance till 12 noon today. Thrilled to have you with us, John Farrell, Lisa Bramwitz, and myself on radio, on television. And John, there are the big stories. And then, John, there are quiet little stories. This from the Associated Press moments ago in Gelsenkirchen, Germany. John, you can translate this for us. German soccer club removes Russian firm Gazprom from jerseys.
Gazprom,
that's where we're heading.
A big sponsor of European football, Tom. And there's been a conversation all this morning about what to do with that Champions League final in St. Petersburg, Russia, later in May. Of course, that story is not even secondary to what is paramount this morning. It's what's playing out in Ukraine. And the words that the Russian president, Tom, used overnight. As Maria stressed, these are the words. They are the words of the Russian president himself, vowing to demilitarize the country and replace its leaders, not hiding the objectives here, Tom.
And again, for those just joining, the speed of movement that we've witnessed across 3.5 hours of broadcast has been, I've never seen it, John. The movement south from Belarus, extraordinary.
We get lucky this morning, TK. Fantastic lineup through the hour. Morgan Stanley's Mike Wilson, JP Morgan's Elise Ossenbach, and Eric Knudsen of Neuberger Berman. Mike, to come to you first, sir, what has this changed for you, Mike, overnight in a single 24 hours?
Well, look, I think it just accelerates some of the ideas we've been propagating already, which is that we think there's, the bigger issue now for equities is slower growth, right? Obviously, we've dealt with inflation via, more rate hikes and tightening from policy, and I think that's, flowed through equity valuations pretty swiftly. And, our view now is that now we have to deal with the, the slowdown that we think we're in the midst of in the U.S. And obviously, an event like this does not help confidence, right? Our view is that consumption is going to disappoint the first half of this year for a lot of reasons unrelated to, this invasion. But of course, now we have this invasion. That's not going to help consumer confidence. That's going to make our consumption story probably more front and center. So, look, nobody knows how this is going to play out day to day, week to week. But clearly, we've priced a lot in now. We've come a long way, and from an investor standpoint, prices are lower. That's always better. But obviously, this increases the probability of a swifter realization of our ICE narrative.
So, Mike, typically, when you introduce geopolitical risk, people would be willing to fade that knee-jerk reaction. I don't hear that from you this morning. Is that right?
Well, no, because of that first part, right? Normally we would, because this would be kind of an event you want to step into, but we already have sort of a negative view on growth, and this is just going to make that worse. Now, what I would say very tactically, and this is not for most of the viewers, but could we get a relief bounce here? Yes, I think we could, because we're extremely oversold, and volatility is extreme, and people are putting on hedges, and that always leads to some relief. But that's all it is. It's going to be a relief rally in which probably to lighten up, because to us, the bigger risk for equity markets is still to come. And that risk is earnings revisions and sort of the growth expectations coming down with or without, this event.
Elise, do you find yourself agreeing more with the Mike Wilson view of markets, or do you think that perhaps the environment for the economy for markets is more sanguine?
We are more sanguine than what Mike just walked through, mostly based on, the fact that consumers remain very strong, balance sheets across both the corporate and household sector remain very strong. And, while these tensions will continue to perpetuate market volatility for the time being, kind of looking through that noise and using what we have learned from historical studies of such geopolitical tensions encourages us to kind of maintain this stance of remaining invested, still having a preference for stocks over bonds, but within those allocations, focus on upgrading quality throughout the year, especially in the event that we get any rebound rallies that allows us to rotate some exposures at more attractive levels.
Elise, I want you to report to us on JP Morgan's tone on Europe. And I do this with a backdrop, and you were so privileged at Northwestern to study under the giant Robert Gordon. He talked about the rise and fall of America and American growth. Tell us what JP Morgan says with this regime change about the rise and fall of Europe.
So generally speaking, we're trying to contain this analysis to the market implications and avoid trying to speculate on any, political sort of, dynamics. But in terms of what the market implications would be within Europe, we do think that the pain there will be more acute. Already you've seen that reflected in the spike in natural gas prices in Europe. But our conviction there remains. We would just be more focused on higher quality segments of the European market, like those that are tied to, luxury brand consumption and the ongoing kind of, industrial tailwinds, potentially stemming from ongoing infrastructure investment in the United States and elsewhere.
Well, look at the move in banks, Tom. SocGen down by 12% now. UniCredit down by 12.5% in Europe. Deutsche Bank down by 10.9%. BNP down by 8.7%. Tom, that's a brutal move for European banks. You know how the stage was set for this year, TK, coming into 22? It's this idea we'd get high yields, the ECB might be in play. for an interest rate hike, and this was the year to pile into European financials. We're unwinding so much of that, Tom, this morning.
Yeah, well, I mean, the stage is set is out the window. I mean, we're deep into February, John, and with this most historic day, and, you know, I'm sorry, John, some are going to go back to Yalta and on to 1991 and on to this historic day and what we'll see from Mr. Putin in the future. Neuberger Berman is an opportunistic shop. Mr. Knudsen of Neuberger Berman, what would you suggest can be the change or the opportunity for investors?
Yeah, first of all, we want to highlight that we're in the midst of a tragic and challenging situation, and so we want to highlight that. We want to observe that there's a lot that's unknown and that this is a rapidly evolving situation. The most important elements here, and this gets to something Mike said, is that this amplifies some of the trends that we had identified earlier this year, and that this 2022 would represent a much more challenging growth inflation mix than what we experienced in 21. And this amplifies that. This makes the growth side more challenging, some more headwinds to growth here, particularly in Europe, but it also amplifies the inflation side, which is different this time relative to other risk-off environments. And you compare this to other times where we've been challenged by geopolitical risk, whether it was Crimea or other examples, in the last 10, 20 years, that's been in a time of commodity abundance. We're now in a period of relative shortage of not just energy compared to prior periods, but also industrial metals. Russia is a large exporter of aluminum, palladium, and platinum. So from a shorter term or more opportunistic standpoint, we have been overweight commodities. We say there is more room to run in commodity exposure as well as in inflation hedges, because that's the side of the equation that is quite different from the last couple episodes that may look like this or rhyme with this.
15 minutes away from the opening bell, futures down 2.3% on the S&P. On the Nasdaq, we're down by 2.8%. Just hearing from the White House, tweeting the following: President Biden met with his national security team in the Situation Room this morning to discuss the latest developments in Ukraine. He discussed how we will hold Russia accountable for its unprovoked and, Lisa, unjustified attack on Ukraine.
Okay, so now we're dealing with what the actual consequences are going to be, especially as European leaders actually do meet. Are we going to hear something about oil? Are we going to hear something about meaningfully accepting the higher costs at a time when this is a hugely political issue for Biden and, frankly, for all of the European nations as well?
That's the offset I'm trying to think about. What next? A tax holiday for gas prices in America, a gas tax holiday, an Iranian crude deal, a reserve release again. They're the three options on the table. For the Federal Reserve next month, this gets really confusing. Evercore write this, and this was the quote for me that stood out in all the research this morning from the team. They basically lay out why they're not ready to fade the headlines yet. And here's the quote: the way that the stagflationary energy shock combined with sanctions disruptions will complicate the ability of central banks on both sides of the Atlantic to engineer a soft landing from the pandemic inflation surge. And Mike McKee, to bring you into the show, sir, and thanks for being with us. How difficult is it for the Fed next month?
Well, by next month, we may have a little bit easier path. We may understand more about what the sanctions are going to do and what the result of this invasion is. But for right now, nobody knows anything is basically the bottom line. We have a host of Fed speakers today, and they are probably all going to say we have to watch this very closely. It's the fog of war. Russia is going to face high inflation, and they will almost certainly face recession. The ruble, as you've been saying, is falling, and that will probably lead the central bank to raise rates. That hurts the people there. But the total impact is going to depend on what sanctions are imposed and how long the conflict goes on. 36% of Russia's budget comes from oil and natural gas, so that's one way to hurt them. For Europe and the UK, it's a different story. A higher inflation is certain. The recession risk rises. The impact, again, depends on the sanctions and the length of the conflict. The ECB's inflation dilemma is that if they do cut off oil and gas, it's obviously going to raise inflation tremendously there. They may have to hold off on their rate increases until 2023. The Bank of England, because of the Brexit problem, probably goes ahead, but maybe slower rate moves. And here in the United States, for the Fed, higher inflation is certain, growth at risk, but probably no recession. Supply chains are going to suffer. Watch out for cyber retaliation. That could be a big issue in the U.S. The balance of risk for the Feds between inflation and growth Right now, they'll look past inflation because if it's energy, it will probably be temporary, and they'll focus on the growth link, which could slow them down.
We've been hearing about temporary inflationary shocks for a while, Mike, and we've been hearing about how some of the rollover effect, the comparison periods, would be due to oil prices coming back down, and that does not seem to be a likely possibility. With a robust labor market and inflation running at the fastest pace going back to the 1980s, how does the Fed justify taking a step back and actually having this be somewhat supportive to an economy that, by all measures, seems to be doing really well?
Well, they're going to have to measure the balance of risks between growth and inflation. And right now, inflation would win. Growth is very strong. But the risk to growth could come once we know what the sanctions impact is going to be. They're probably going to err on the side of growth, not let unemployment rise too much. But it is a real dilemma for them. They certainly don't want to ease into an oil price shock as they did in the 1970s and really create an inflation problem.
Mike McKee, thank you, sir. As always, if you're just tuning in worldwide on TV and radio, special coverage for the next 3 hours with Tom Keene, Lisa Bravitz and Jonathan Ferro. Futures down about 2.3% on the S&P. Going into the opening bell about 10 minutes away. Mike Wilson and Morgan Stanley standing by. Mike, let's just go here on the Fed. Does this change anything for the path of the Federal Reserve through the next 12 months? Is it too early to tell?
Well, 12 months is a long time, but I would say for the next month, it probably does not. I mean, Eric is exactly right. Mike said the same thing. I mean, look, this is just where we are, right? This is why the fire and ice narrative, is so important to kind of understand. We're getting squeezed on both sides as it relates to risky assets, particularly equities, okay? Now, that doesn't mean that everything's uninvestable. It just means that you have to think about, what works and what doesn't work in this kind of environment. I would say it's going to be difficult for the Fed to pivot anytime soon. All right, we know the data is not going to get meaningfully better. It may get meaningfully worse if oil continues to spike. I would say the thing that's going to get the Fed to pivot probably is not going to be inflation coming down too fast. It's going to be that growth starts to really roll over, right? Because we're now getting to levels where there may be demand destruction. That's been part of our thesis, and that may play out now faster. And so if that happens, we could see the Fed pivot at some point in the next, say, 3 to 6 months, but it won't be for good reasons. It'll be for reasons that are probably equity disfavorable. That's the challenge. You're getting squeezed on both tighter financial conditions and slowing growth. And that's our thesis for 2022. It's just playing out faster than we anticipated because of this unfortunate event.
Mike, you hear a lot about the S word, stagflation. We've asked several guests through this morning whether the game has changed for them, whether they're ready to talk about stagflation and what it means. When you go through various scenarios and introduce the stagflation word to the conversation, Mike, where do you want to be in that environment? Where in this market?
Well, I mean, historically speaking, stagflation is not particularly great for anything. I mean, commodities is the easy one to kind of say, okay, fine. Anything that has variable income that can grow in a world where there's inflation, like that's not really our base case. In other words, I would suggest strongly that if inflation gets out of control or it doesn't come down, that it's going to have a recessionary effect. Okay. And that therefore policy can reverse course. I don't think it's the 70s. I think it's the 40s. As you know, we've written about this extensively. I think the risk we have now is a boom bust, classic boom bust scenario. Last year was a boom, everything's short. We have supply now picks up. You actually get a deflationary whiff in consumer goods. That's kind of our base case. That sounds good on the surface. The problem is it's bad for growth. So we got to digest that. And that's probably 2 quarters of digestion. We'll come out the other side of this on the back end. Notwithstanding, we don't know what's going to happen with this event that we didn't predict, obviously. But let's assume cooler heads prevail at some point later this year. There could be an reacceleration expansion later this year, but we're just not there yet. Right. We're not priced for that. And we're not in a place where growth is going to accelerate anytime soon.
Mike, what will the deep pools of money do? What will private equity do? What will the cash cows of corporate America do here? They've got a huge down market opportunity. Do you, James Gorman and all, just suggest they will go, go, go?
Well, there's a structural change. I would say, 10 years ago, Tom, everybody was afraid of inflation after the GFC. We didn't get it because obviously the money never left the banking system, right? It was stuck. And it was secular stagnation. It's different this time. We pumped the money right into the economy.
Yeah.
That was different. Helicopter money. We have inflation. We got more than we bargained for. And so there is an argument, okay, to be made for the great rotation is now upon us. And that's what we're seeing with our asset owner clients, be it individuals or pension funds, et cetera. They've made the active decision to reduce, bond exposure, increase equity exposure permanently, right? That will buffer some of the downside, in my view.
Yes. Well, it's going to buffer the downside, but then what that comes down to is what everybody owns. I mean, there's retail own, there's hedge fund own in that. Let's ask the elephant in the room question, which is, what does big tech do here?
Well, as far as the stocks go, I mean, we're seeing what's going on. I mean, we're working off a unsustainable valuation bubble in a lot of parts of the growth markets. All right, that doesn't mean the fundamentals are in terrible shape. It just means these companies need to grow into valuations that were unsustainable for the world that we're in now. Regime shift towards higher inflation, higher cost of capital, and so I'm not of the camp that it's value versus growth and you can only own one, not the other. I think it's just going to be more idiosyncratic. Let's pick, securities that have, the reasonable pricing for the growth outlook that's achievable. Because that's going to be a mix of value and growth. It's not one or the other, but I would say the growth stocks still have some downside with respect to valuation.
Eric, we've been hearing a lot about the United States and sort of the incredible momentum that the Fed is facing off with and has to justify somehow a dovish tilt with. From your perspective, how different is the picture right now in Europe, especially given the exposure to Russia directly through gas and oil, but also just economically?
Yeah, I mean, this does change things on the margin, certainly from a economic growth expectation standpoint. It also changes things from a fiscal or a monetary policy standpoint. It is quite possible that this represents kind of peak hawkishness in terms of expectations for central bank rate increases. You've already seen the 50 basis point increase in March taken out of expectations. The market was pricing 6 to 7 increases by the Fed, 5 increases by the ECB. We've been on the under on that, and don't think that now that the central banks will have to raise rates as much. They can move in a more measured and gradual pace as they try to assess this more challenging growth and inflation mix. As we work with our institutional clients, they've been assessing relative opportunities in Europe versus and Japan versus the U.S. And we've been, gradually tilting into those areas. Europe, up until, basically 12 hours ago, has been outperforming the U.S. from an equity standpoint this year. And so, this is a much bigger picture than just one action. To size this, the GDP of the Ukraine is $164 billion. I mean, that's a fraction of global equity market cap. That's a fraction of European market cap or U.S. market cap. Russian trade is $500 to $600 billion. Half of that goes within the CIS. And that's, again, 1 to 2% of global trade. So what we do think is that we likely have seen not just peak hawkishness on central banks, but this reinforces the notion that we've seen kind of peak globalization. All of these things lead to a challenge both on the growth side, although we don't think this meaningfully increases recession risk, given kind of the relative size of what's at play here from a kind of global GDP standpoint. But it also does fuel potential for higher inflation, given that challenge around likely less globalization, less trade from here.
The next CPI read, March 10th. Then the big meeting, March 16th, that's where the decision comes from the Federal Reserve. Tom, seeing some really big moves on euro currency pair. Euro-Swiss, negative almost 1% now, largest drop since 2019.
These are huge moves, and what's important, folks, is they don't all move at once. Across equities, bonds, currencies, commodities, it's here, it's there. I've got a down negative 800, a VIX out almost 6 big figures. But right now, John, it is a statement about Europe is the United States open, and that statement is fear, and that means strong Swiss franc.
It crude up to 104.40 on Brent, up 7.8%. WTI just short of 100, breached that level a few hours ago at 99, let's call it 20, up 7.7%. Elise, I want to go to the investment bank side of JP Morgan, forgive me. This was their quote. Just assuming Russian escalation, we've got that, is coupled with an Iranian deal, we might get that. The team goes on to say we see the Brent oil price averaging 110 in 2Q22, 100 in 3Q, 90 in 4Q. You know the energy equities move here, Elise, year to date. It's just been absolutely massive. Any reason to stick with it?
We think so. We have been talking about putting on energy exposure both through the commodity and the equities that are linked to the sector so far this year, and we continue to view that as a good place to hedge against some of these ongoing tensions and escalations. So absolutely an area that we're continuing to consider and talking to clients about putting on exposure in.
Futures down 2.5%, at least on the NASDAQ. Bear market around the open and bow. That's what we're poised for.
It's right now a really dramatic scene in markets, and people are looking at the idea of higher oil prices and, frankly, the potential for a stagflationary bend impeding the economic growth. One thing that we don't hear, though, in commentary, I got to say, John, that I find interesting, if the Fed becomes more dovish, if the ECB becomes more dovish, no one is saying that is a reason to then buy. We're not seeing this as a reason to become more bullish, just recognizing some of the potential threats to economic growth.
Because they're dovish for the wrong reasons. The move you're seeing in real yields today is not supportive of the market. Real yields lower, break-evens higher. When a central bank has to be dovish for the wrong reasons, that's not an environment, Lisa, you want to get long in.
Which is the reason why there's such a lack of conviction right now, and there's a lot of moves all over the place. But again, to talk about the yield curve flattening, which typically is a predecessor to a recession, being driven by the long end, by being driven by a bite being taken out of longer-term growth, says volumes about where we are right now in this moment.
And that's why inflation has changed the game. When we say dovish, we mean a pause. We don't mean easing. They can't ease this time around, because they're already at zero and inflation's north of 7, Lisa, on CPI.
This has been one of the big risks, is that because the Fed is already so low, because the ECB is already so low, what further can they do if there is an economic disruption from an exogenous shock just like this?
That's the additional risk here as we see the open and bow in New York City. Futures are lower 2.6%. In the bond market, yields are lower by 10, 11 basis points to 188.71 on a 10-year. In FX, euro dollar 111.51. Just these big moves, Tom, we're seeing in foreign exchange. I mentioned those euro currency pairs. Euro dollar negative 1.4%.
On this historic day on Bloomberg Radio, John, you see this every day on Bloomberg Television, but the loneliness of those exchanges on opening, the lack of celebration,
Tom,
really speaks of this moment.
The clapping
is
very absent. It's almost embarrassing, I think, to clap around the open and bow this morning with equities down and down hard. At the moment, as we open up, Tom, about 50 seconds in, here's the state of play on the S&P, down by 2.5%, on the NASDAQ, down by 3.27. TK, you can run through the year-to-date figures. I can tell you where we were year-to-date coming into today. The S&P was already down 11%. The NASDAQ was already down 17. That's intraday. Coming into today, Tom, they were the numbers, down 11, down 17. Add it all up, it's brutal.
Again, I go to the Haven indicators, and gold 19.54 the ounce, 2.4%, certainly distance away. John, I really want to say we're seeing extraordinary news flow across what Bloomberg does best, which is the aggregation of global headlines. We're being scrupulous about who we attribute to, John, but there are distressing hints, if I can, out of the 3 or 4 fronts of Ukraine under battle.
The NASDAQ entering a bear market. Let's get to Kaylee Lines for some movers. Hey, Kaylee.
Hey, John. Well, broadly, it is a down day for this equity market. There are a few pockets, though, of strength, and that is tied to really moves in underlying commodities, and that's translating into some energy and material stocks. Oil movers, for example, moving higher with the moves we are seeing in crude. The likes of Chevron up about 0.5%, though that is off pre-market highs, and you're even seeing the likes of Devon Energy now getting caught up in the selling pressure. You're seeing also, as well, gains for some mining-related stocks like Newmont Energy, and then defense also catching a bid here. Lockheed Martin is up 2.25%, but there are a lot more baskets of stocks that are feeling that downward pressure on the back of these geopolitical tensions, guys. Tech, of course, bearing the brunt of this sell-off. Apple is lower by around 4%. Nvidia is as well. And then you also are seeing pressure across the travel complex, across the banks complex as well, as we're seeing yields coming in. JP Morgan shares taking it on the chin, down about 4%. Carnival is down 6.4%. But really what is leading the losses is tech. You mentioned it, John. The NASDAQ 100 entering a bear market, now down more than 20% from its peak last year. Tech, of course, already weighed on by what has been perceived to be a higher rates, higher yield story, calling into question some of those richer valuations. Now you layer on top of that the broader de-risking we are seeing on the back of geopolitics today, and it paints a very, very ugly picture, John.
Kelly, thank you. Intraday, we're down more than 2% on the S&P. On the NASDAQ, down by 2.5%. Equities lower, Tom. Year to date, bear market for the NASDAQ now from the previous high at the latter end of last year. Year to date, down by, 18 percentage points? What a gap lower we've had, Tom, but the story's evolved. The reason for the move lower at the start of the year, the move lower this morning is different, Tom. The character of the sell-off has shifted too.
Yes, the character to me, John, is the absolute critical thing, and that, yes, we're down, and we can talk bear market and measurement. I want to remind people a bit younger that a bear market after the 18% is usually perceived as 30 to 35% down. I'm not inflammatory. I'm just saying that's what happens when you really go. What's missing this morning, John, in this historic moment is this idea of catharsis. I don't see any catharsis on the Bloomberg screen.
Lisa, when we talk about the character of the sell-off at the start of the year, real yields higher, nominal yields higher. We did some massive work at the front end of the yield curve. This morning, flip it the other way. Real yields lower, break-evens out, and the Fed stuck between a rock and a hard place. What can they do about the environment we're in at the moment?
Which is the reason why tech sell-off is really strange, right? Because you would expect tech to actually do better, outperform as a safe haven. And this raises a question of whether we're seeing a sell what you can kind of environment, not necessarily what you want to. The sort of flooding into any sort of haven or just hoarding cash. You could see that in T-bills turning negative, the most negative going back to the beginning of the pandemic.
Just looking at the sector breakdown, financials, bottom of the pile around the open. We're down about 3 percentage points there on the S&P. The only standout in green, the only industry group advancing, I mean, you can guess it, energy, up by 0.4%. Mike Wilson, I want to come back to you and just work through some of this with you. Mike, you came into the year pretty bearish, to be fair, at 4,400. You're at the low end of all the forecasts on Wall Street. Mike, let's talk about this. What would make you bullish? What would you need to see here?
Well, it's price, and we're getting there, right? So, I mean, the reason we weren't bullish is there was no upside, and there was downside to targets. So, we're pretty disciplined, as you know, John. We don't get too emotional around things. And so if we got to 3,800, we always thought we'd overshoot to the downside of, 4,000 was the minimum downside. We'd start to get interested. 3,800, okay, fine. But I think we could overshoot that if, in fact, this, accelerates the ICE scenario into something that feels more recessionary for a couple of quarters, at least from an earnings standpoint. We'll see how that plays out. So it's price, number one. But what I really want to see is I just want to see expectations get more realistic on margins and some of the growth from consumption that we think is now already starting to play out. We're hearing it from some companies, and that was long before this, event that's happening today occurred. Okay, that was already in process. So let's just get those expectations down, or let's get price down, or let's get both down, and then we'll probably step in.
Well, price is down now, 41.27. Mike, when you do the homework and you come up with 3,800, can you just run us through it briefly? Where does that number come from? What's special about the 3,800 mark?
So there's a lot of technical support there, number one, which is what you got to do in these types of situations when you're in sort of a, we're in a bear market, as Tom said. We've been in a bear market, though, for 6 months. It's just people now are waking up to it. I mean, the average stock was getting crushed last year, as you know. So here we are. We're having the finishing move. So we're just watching the technicals. 3,800 looks pretty good in that regard. Secondarily, from a valuation perspective, we've always said 18 times is the right number. 18 times 225, which is, year end, that's 40-50. And a little overshoot, call it 17 times wouldn't be out of the question. And if numbers come down sort of to 215 on this growth scare, that gets you to 3,800. So there's fundamental support, there's technical support. That's where the number comes from.
In the meantime, people are trying to parse through what type of supply chain disruptions there could possibly be. I was talking about what's the rationale behind selling tech, and Elise, Gina Martin-Adams of Bloomberg Intelligence came out and said, actually, this is the surprise victim of a Ukrainian invasion by Russia, the idea that Russia is cutting off some of the supplies from key areas that feature in some of the supply chains. How much are you looking at this type of granularity when deciding how to move next?
We're looking into the granularity, but I think it's kind of an oversight of what's going on behind the surface of everything with Russia and Ukraine. To us, the year-to-date sell-off in tech has largely been driven by the Fed's, aggressive shift towards policy tightening. Obviously, that picture has become a little bit more muddled for all of the reasons that we've been discussing for the past few minutes. But if and when we would see any sort of rebound rally in tech, we would be keen on rotating some of those exposures into to more defensive segments of the market. And that has more to do on our outlook that this economic cycle is progressing. And although we think the expansion will continue, we do want to start repositioning portfolios to kind of get away from that rising tide lifts all boats, speculative sort of benefits environment, and more towards, well-insulated portfolios that can navigate a maturing cycle.
Just getting a headline, Tom. 3 p.m., the ECB's President Lagarde, EU officials to hold a press conference at 3 p.m.
3 p.m.
Put that one in the diary. President Lagarde of the ECB and EU officials to hold a press conference.
John, is that 3 p.m. our time?
Trying to work that out, Tom.
Yeah,
if there's 3 p.m. local or not. I'll get the team to work that out quickly, but certainly in the next few hours, we're going to hear from the ECB president.
Well, there it is in comments on the central bank, and of course, they're observing markets moving here as well. John, with these esteemed guests, I want to go to a brilliant essay, no surprise, from Michael Purvis of Tallbacken, where he channels the game theory that Dr. El-Arian is so famous for, the moments of T decisions that can be made, and going back to Frank Knight in the strange word uncertainty on unknown unknowns. And that's really what we're talking about here into this afternoon of politics and the markets and trying to reset to our good guest world is what are those unknown unknowns right now.
And the psychology of the moment too. And Eric, I'd love your thoughts on that. This is a really difficult moment, trying to work out how this settles. Hopefully settles down soon too. And what it means for a market, what it means for policy. Eric, everyone wants to buy the dip, and then we get one. They want to buy the correction, and then we get one. And you start to conflate it with even scarier things on the horizon. Maybe this is the one. This is the one where we get this monster correction in tech stocks and we don't recover for 10 years. Eric, how do you divide the emotion of the moment with just the fundamentals, to focus on where we are and what the price of those fundamentals are?
I think that it's important at this point to step back and ask the basic question: does this shock to the system meaningfully increase the risk of recession in the next 12 to 18 months? If the answer is yes, then there's look out below, right? Then that would generally lead to a true full-on bear market. If the answer is no, this is merely creating a more challenging growth inflation mix, then you can start doing the kind of math that Mike just took us through and find entry points for owning equities, assuming reasonable earnings growth, assuming reasonable valuations, and in fact, certain aspects of the market environment have just gotten more attractive for equities. Real yields have gone from negative 40 to 45 to 55 basis points to negative 85 basis points. That's generally correlated with more higher valuations in equities. When you talk about uncertainty, one thing that we would be doing or looking at right now or speaking with our institutional clients and clients more broadly about is taking advantage of this environment by owning volatility. If you want to own some more equity at this point, do it by selling puts on an equity index with VIX at 37 rather than VIX at 20 or VIX at 15. Manages your downside risk. You're capturing very attractive premium and gaining some additional equity exposure on the margin.
Elise, can I give you the final word on what you're looking for through the rest of today?
Sure. We're obviously expecting more volatility from here, but very much encouraging investors to stay the course, stay invested, focus on the longer term fundamentals, and, kind of acknowledge that geopolitical events like these don't actually tend to have lasting impacts on equity markets, particularly in the United States.
Elise Ossenbach, alongside Eric Knudsen and to Mike Wilson, to the three of you, thank you so much as we work through a difficult time worldwide, and particularly, of course, especially for the people of Ukraine. Equities down by more than 2% on the S&P, on the Nasdaq, Tom, down by more than 2%. This has been a tough time. That's the story for equities. Let's look at the story for commodities as well. To work through Brent and for WTI, Tom, Brent crude 103. I mean, we back away from session highs, don't we, Tom? But these numbers are pretty stunning.
Yeah, they're stunning, and I really want to emphasize it's not just about oil. I'm bringing up the wheat chart, which is 1, 2, 3 days of spike up. I don't have the percentage move right now, John, but you look at it. Wheat is quoted in Germany, wheat quoted in the EU, and with the huge Russian wheat exports, you wonder how that fits in. We heard earlier, would they sanction wheat? Would they sanction agriculture? Maybe not, but nevertheless, commodities is not just Brent crude this morning.
I talked about Javier Blas this morning, Tom, and the opinion piece he wrote earlier this week. I want to get to Javier right now. Javier, just to go through the numbers, On any given day, on a single day this week, this is what the UK, EU and US spent on commodities from Russia. You said close to 700 million. Have you any reason to believe that changes today, tomorrow, the day after, next week?
Well, that number is already up because commodity prices are massively up. I mean, I'm looking at my Bloomberg screen right now. Natural gas prices in Europe are 47% up. That's 47% up on the day. Oil prices up 6%, aluminium 5%. Wheat prices that Tom was mentioning earlier in Europe up 15% to an all-time high here in Europe. So the volumes of natural resources that we are buying from Russia are getting more pricey, and for that reason we are sending more money.
Yeah, Javier, to your acclaimed book, not only talking about oil, but the people of oil. The people that are in that book, they're heavy hitters. What will they say to the politicians attempting to apply or gauge the need for sanctions?
I think that probably, and I have been speaking to some of them this morning, they're going to be warning that whatever you do, you just think about the unintended consequences. You need these commodities for the economic health of Europe. So you go very hard on Russia, you may have a recession in Europe. So there are going to be a bit of dose of warning. The other thing that they are telling me is that whatever happens with the sanction that is announced by Europe and President Biden later today, there is a lot of self-sanctioning already happening from the financial institutions. Many American banks simply do not want to touch anything that has to do with Russia today, and they are warning also about that.
Javier, you mentioned earlier offline that this is the first time that you have ever seen all commodity complexes surge in tandem. Can you give us a sense of the significance of that?
Well, it's very important, particularly for the commodity traders and the banking industry. And one thing that we really need to start watching right now as we are entering the afternoon in Europe is margin calls this afternoon, this evening here for the commodity markets. We have huge price increases across the whole commodities complex. It's not just gas or oil or aluminium or wheat, it's everything at the same time, and something that we have not seen before, moving simultaneously at this rate. The size of the margin calls tonight are going to put a lot of stress on some of the big trading houses. I think, and I have spoken to some of them, they were prepared for this, they were stress testing, but some medium and smaller players may have trouble with the size of the margin calls that is coming.
Javier, wonderful as always, buddy. Good to catch up. Javier Blas there out of London. We'll be catching up with JP Morgan's Christian Malik a little bit later this morning. We'll do that in the next hour. That man has a big call in the crude market. I wonder if it just got even bigger. I want to turn to Maria today out of Brussels. Maria, just to touch base with you, just got a headline moments ago that we'll hear from Lagarde and EU officials in a news conference. Any idea when we're going to hear from them?
Look, I think it depends on how long this meeting goes, but if you look at the reason why she's doing this today, let me just give you one stat. If we do get big sanctions on Russia, for every dollar the United States is going to lose on this, the Europeans stand to lose 10. So this gives you an idea of the impact that this could have on the European economy. As you know, there was a meeting coming up in March. The market was assuming this was the end of EC money, QE pandemic program. A lot of people would now tell you, well, maybe it's time for the ECB to look at this differently. And there will be a real question about the implications that this will have for inflation. Remember, if Russians do go through and follow through this idea of, well, if you don't back Putin, we're going to make you pay very expensive for energy, then that is going to feed directly into the inflation picture in Europe. So a lot of this has to do with coordination between the central bank and the politics. We also know that behind the scenes, European officials on the political front are meeting too as we speak, and they're keeping a very close eye on the situation, particularly around the Ukrainian capital, around Kyiv. They're very worried about whether or not Russian troops could potentially take over the city in the next few hours. We're talking about hours now.
Yeah, Maria, thank you. And actually just getting some clarification, a correction. We're all following the headlines here. The ECB's Lagarde and EU officials will hold a press conference tomorrow. Not later, Lisa, tomorrow.
And this does matter because there is an issue of whether central bankers are going to be formulating some sort of emergency response or whether they're just going to keep an eye on this, and it indicates more of the latter than the former. I just want to go back, though, to something that Javier Blas said, and just sort of to reset this idea of margin calls, this idea of fallout that could go far beyond what we're seeing right now in such violent moves, particularly as supply chains get disrupted and the expectations for more. As Russia does increase recent escalation in its invasion with Ukraine?
Things are moving fast, Tom. Just trying to keep up. We all are.
We are, with the Dow negative 814. For John Farrow, I quote SPX here, negative 88 on that, 2.1% down on Standard & Poor's 500. The VIX out 6 big figures, now out only 4 big figures, but a true churn to the market, and critically, Euro Swissy breaching 102 moments ago. Strong Swiss franc. It is time to recalibrate across politics and economics. We can do that looking at the markets as well with Michael Darda of MKM Partners. Michael, you and I have gone back over the years as students of history. This is a regime change as we all breathlessly see the speed of movement of Russian, or indeed I could almost say Soviet forces. Fine. Of this regime change, how permanent is it?
Well, Tom, we've got a lot of uncertainty in that regard at the moment. Obviously, markets do not like disruptions to commerce, and sanctions and wars are presenting exactly that. So, we've had a sell-off here that's intensified. But quite frankly, if I could send a message to the retail investors that are out there listening that might be on the verge of panicking, you really do not want to be selling into weakness. I think it's very easy to open up the portfolio and see what's happened to the markets year to date, and it's intensifying, and all the headlines are negative. But I would just simply recommend to the retail investor to try to buck the trend here a bit. And if you haven't sold into this, this is not the day or the moment to be selling. In fact, just the reverse if someone has a long enough horizon and the appropriate risk tolerance.
Michael, you and I have always talked of the acclaimed work of Roger Ibbotson and that famous S&P chart he made that goes way back past the Depression as well. In World War II, Guadalcanal was for me the low in 1942, what I call the Guadalcanal low. Except nobody knew about Guadalcanal because of the secrecy of the Pacific battles. Now we are dealing in real-time social media, Twitter showing us helicopters moving south to Kyiv. How do investors deal with the immediacy of the information of this modern day?
Well, the way they deal with it is by not overreacting to what already happened, okay? We've already had a correction. It may continue. What the fact is, we came into the year with the markets at least modestly overvalued. Our work was saying around 10% for the S&P 500. That's been completely wiped away. And so there's a lot of uncertainty. You're not going to be able to perfectly time the market. But the reality is the Fed has been behind the curve, is still behind the curve. And we can debate about what happens in March, but we're probably not going to see the U.S. economy careen into a recession this year. It'll probably still be well above trend growth. The Fed will be moving modestly, but will be moving this year. And so slow and steady wins the race here, Tom. If the individual investor has the intestinal fortitude to be buying into weakness, not at the beginning of the year, but now we're down more than 10%, this would be the time. And to be patient. A lot of uncertainty, but what's happening in Ukraine is likely not going to be pushing the U.S. economy or the global economy into recession.
Michael, you're talking about how much strength there is in the U.S. economy, how you expect the Fed to stay the course. If they don't, if they buy into the same narrative that markets are right now of perhaps moving away from some of the rate hikes this year, do you think that that would be a policy error?
Big time. Big time. So, let's just break down what happened in credit markets this morning. If we look at the 5-year horizon on the yield curve, real rates dropped by about 25 basis points, but inflation expectations rose by exactly the same proportion. All right. So what does that actually mean for the neutral interest rate? It essentially means it's a wash, right? And the starting point coming into the year was the Fed way behind where it was even in the last cycle without a big inflation overshoot. So the Fed's policy rate with 5-year expected inflation above 300 basis points is 250 basis points below where it was in late 2017 when the labor market had recovered to current levels of utilization. So I think there's a risk here if the Fed's going to slow it down. I don't think they'll skip the March hike unless something really crazy happens in the intervening weeks. But the risk would be that we're kind of baking in a behind-the-curve inflationary Fed stance into the cage.
Mike, thanks for being with us, sir. Mike Dowler, just wonderful, as always, buddy. If you're just tuning in, equities are lower by 1.7% on the S&P, on the Nasdaq by 1.3 off session lows. Overnight, as you know, Russia invading Ukraine. And as the morning progressed, we started to get a deeper suggestion, a bigger suggestion that they were heading towards the capital. All headlines point to that direction at the moment, Tom. Starting to get an understanding of what's happening right now between G7 leaders, including the United States. There was a meeting on Ukraine which started at 9:17 DC time. Biden, G7 leaders discussing the response to Russia on Ukraine. Seemingly here, Tom, they all want to stay on the same page, keep the same script, and come up with the same reaction, the same response. The effort here, of course, is incredibly difficult. The objective, of course, is to cripple Russia. They've been very clear about that, Tom. Can they do that without crippling Europe? That's the challenge for leaders with those talks ongoing.
And I would emphasize the silence here. Sometimes, folks, it's not the news you see in the headlines coming out of the White House. Anne Marie Horton is 1600 Pennsylvania Avenue. To me, John, what is so important here is the headlines we're not seeing. We're really not seeing news flow from the 3 or 4 ports of the Black Sea where the Russians are attacking. Reports of Mariupol, clear reports of Odessa. There's no question about that. It's the headlines, John, that we're not seeing into the Ukrainian early evening that are so important.
And the headlines we're waiting for, Lisa, the response of European and U.S. leadership.
You know, they're crafting the response. That's what we're hearing from the G7 meetings. How much has already been pre-crafted, right? I mean, they've been talking, they've been meeting for the weeks leading up to this. How much they have to reshift because of the speed. And we've been talking about this all morning, John, the speed of the invasion in Ukraine.
Well, the speed of the energy move, too. I mean, Tom, look at this headline. Benchmark European nat gas prices rise as much as 50%. That's intraday. That's not year to date, Tom. That's intraday.
It's intraday, and let's be clear here. This is into the afternoon and early evening across those time zones. And, John, I would really suggest the news flow in the coming 3-4 hours will set the tone for a second market adjustment. Maybe it's, say, 12 noon our time.
Got to set the tone for the Fed speak, too, the ECB speakers.
How do they speak today? I mean
this is the lineup.
You rip up the script, and it's not a time for a joke.
Speeches, Q&A on the fly. Lisa Bostic, Mester Daly, Waller, all lined up through this afternoon.
How do they give guidance at a time of such incredible uncertainty? Do they talk about taking a step back, or do they say we're going to go ahead and then wait? What are they looking for to determine the economic ramifications of this, especially as we see the ongoing jobless claims fall to the lowest levels going back to 1970 in the United States?
The ECB's got to be in a tougher place here, Tom. I think this is so hard for the ECB. With energy prices doing what they're doing, growth already soft in Germany for Q4. You saw the Germans scared of what would happen in Q1. Some real weakness up front in the first month of Q1. Where does that leave the ECB?
Well, we're going to hear from Lagarde. John, to be clear, there was a correction to the headline for those like me confused.
Tomorrow.
We were looking for a headline today, but it's tomorrow, right?
Press conference, 3 p.m. Brussels time, as I understand it, after talking to the team.
I'm going to bring this up, John, without attribution. I've got to be very careful here. It's out in the Twitter sphere. But like the German team taking the Gazprom tag off the uniform, some reports of Russian troops entering the Chernobyl region. That speaks of a time long ago.
We'll stay on top of the headlines, Tom. More still to come with the Bloomberg Surveillance team, with Tom Keene, Lisa Abramowitz and Jonathan Ferro with you through the next 2 hours, with equities down off the lows, but down 1.6%. This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
President Putin who is bringing war back to Europe.
This is a deliberate, cold-blooded, and long-planned invasion.
The United States, together with our allies, will defend every inch of NATO territory.
Today, in concert with our allies, we will agree a massive package of economic sanctions.
The Russian leadership will face unprecedented isolation.
This is an extended edition of Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide on TV and radio, this is Bloomberg Surveillance. Good morning to you. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. TK, about 30 minutes into this session, we're down 1.5%. Just words you do not want to wake up to, Tom. War in Europe.
There was a headline, Russia invades Ukraine, and it was more than an invasion. It is a multi-front invasion, and the news flow extremely supple right now. As I mentioned moments ago, John, and I know we go to Henry in Moscow, what is important to me now are the headlines that are not being written. There is a silence across much of the geography of Ukraine.
And a silence on leadership in the G7, EU members, Tom, the President of the United States, because right now they're in a meeting. We wait for their response.
We have lots of internal memos, and we had one in Washington that said to me there were 2 camps at the White House. There's no time for camps in any of this diplomacy and reaction, John. There needs to be singular action, and you wonder, will there be that, and will it be coordinated?
Lisa, the dark words of the Russian president earlier today, vowing to, quote, demilitarize the country and replace its leaders.
And right now we're hearing reports of heavy fighting in several different places. We're hearing of military bases being targeted in Ukraine by Russian Air Force, as well as ground troops. We're talking and hearing about people hiding out in Kiev, in the capital, as they hunker down for what feels like something that's just getting started.
And we're hearing from senators as well, Lisa. Senator Manchin, in the last hour or so, the U.S. must impose, quote, crippling sanctions on Russia. And we've all been talking about this, not for the last couple of days, for weeks, for months, for years. If this kind of thing ever happened, can you impose crippling sanctions on Russia without crippling Europe?
And right now, given the fact that you're seeing natural gas prices surge 50, 60% on an intraday basis, how much is their hand called by what the actual consumers are doing? And what you've said is absolutely right on. The ECB has a much more difficult job right now than the Federal Reserve, because that economy is a lot more vulnerable and frankly, on both fronts, because it hasn't responded and rebounded in the same way that the U.S. economy has.
Let's whip through this price action briefly. About 30 minutes into this session, we are off lows. We're down by 1.9%. 0.5% on the S&P, still down by 1.6% on the NASDAQ. There is a bid in the bond market, but yields are off the lows too, down about 9 basis points, Tom, to 189.92. Crude, that move backs away as well, Tom. That was through 100 early this morning, 97.34. Brent crude nicely through 100 early this morning. But Tom, we just back away a little bit from the bigger moves we saw early this morning.
No question about it. Across the haven pairs that I look at, including Euro, Swissy, and gold, you're absolutely right, John. We move back a little bit, but I would suggest we move back a little bit, waiting for the immediate news, certainly the White House front and center.
Well, Tom, we have a time, 12:30 in Washington, the President of the United States to speak about Russia and Ukraine.
How do you do, John? How do you do partial
DC.
sanctions today? Explain to me a tranche.
I don't think they're going to be talking about the first tranche. Lisa, I think it's fair to say the language of the British Prime Minister Boris Johnson, tranche 1, the language of the American President Joe Biden, tranche 1. I don't think we're going to hear about the first tranche, a second or a third. This is it, isn't it?
They have to lay their cards on the table, which is probably why it's a complicated discussion, because they have to lay it all out there and figure out how far they're willing to go with a Vladimir Putin that perhaps they underestimated in terms of how quickly he would move into Ukraine.
Let's get to team coverage. We can start in Moscow and we can get to Bloomberg's Henry Meyer. Henry, you've seen the reports, the march towards the capital. Henry, that's a real escalation. Your read on things at the moment from your perspective, from where you're sitting.
Right. I mean, what we've seen today is a kind of campaign of shock and awe. The Russians, unleashed a barrage of missiles, air attacks, and artillery, which aimed to cripple the Ukrainian air defense installations and command and control centers. And then you saw, ground troops moving in from several different directions. And as of early afternoon, there were already attempts by the Russians to take a key airfield near the capital. So it doesn't appear likely that the Russians will actually try to move into the cities at this stage, but they may encircle them.
Henry, the idea here of Mr. Putin, and as you say, with great respect for your years in Moscow, the Russians. It's just about Mr. Putin. The Guardian a few days ago mentions his reign. Explain to our global audience in this time of crisis how small the circle is around Vladimir Putin.
Well, he has become increasingly isolated, particularly since the pandemic started 2 years ago. He was, for health reasons, was not allowing people to see him. Therefore, he has become very reliant on a small entourage of security hawks. And this was very interesting earlier this week when he held a Security Council meeting, which paved the way to his invasion. You saw that these were the people. He is relying on the heads of the intelligence agencies, the military people. That's the advice he's getting.
Henry, Angela Stent talks about the near abroad. I think we all understand that Ukraine, and certainly eastern Ukraine, out past Kyiv, is the near abroad. If Russian troops move west, somewhere in the vicinity of Poland, does Poland suddenly become the near abroad?
I think, honestly, that, this is about Ukraine. I don't think we're going to see anything beyond that. But, this has been something that for years Putin has been concerned about this. 2014, we saw those events. And, I don't think anyone could have imagined it would reach the point it has today, but it has.
Henry, we're hearing a lot about people leaving Ukraine, trying to flee, and the surrounding nations preparing for refugees. In Russia, are there any people who are planning to leave ahead of some of the sanctions and the isolation of that nation?
I'm sure, people are thinking about that very seriously. I mean, there's certainly, a sense of panic among certain people that they're braced for what's ready to come, and frankly, disbelief. I don't think people have quite come to grips with this new reality. It's like they're woken up in a different country.
At what point does that factor into Vladimir Putin's thinking? A lot of people, particularly in the West, were feeling like they're really not negotiating with a reliable actor in any way. How about the rank and file of Russians? Do they still think that this is the West, or are they looking inward and trying to figure out the leadership?
I do think that, you know, there's a very serious threat to Putin's position, especially if this operation starts to go wrong, if you have, you know, high civilian casualties. Definitely, you know, Russian people consider Ukrainians as you know, a brotherly nation. That hasn't changed. So I do think that he's taking a huge risk.
Henry, we have to leave it there. Stay safe, sir.
Wow.
It's good to catch up with you. We appreciate it. Henry Meyer there of Bloomberg. As that headline crosses the Bloomberg, Tom, just moments ago, that President Biden will speak about Russia, Ukraine at 12:30 Eastern Time down in D.C.
And what he knows, and our authorities know, including General Austin at the Pentagon, John, is the military efforts are moving. We're very scrupulous on surveillance, and particularly with this special coverage, folks, to be very careful about the videos that we see in the modern social media and all that. John, let me editorialize. The social media out of Ukraine is grim.
Well, let's not go there, Tom. It's already dark enough, isn't it? And it's incredibly personal for the people of Ukraine. Can we change the behavior of the Russian president? You've heard the words from Ian Bremmer this morning, Tom. Unlikely.
Yeah, it's just simple. I mean, Dr. Bremmer weighs in, as do others, waiting to see the level of sanctions as well. John, why don't you bring in an Anne-Marie Horton? She's had an exceptionally busy day. She's been sending me her sourcing in Washington. It's complex.
Well, AMH, let's start here. We hear from the president at 12:30. Over the last hour, he's been on the phone with allies. They've been so well scripted. Every single term, U.S. intelligence has been on top of this. They've made everything very public. And every single turn, the Russian has basically followed up with every single step the U.S. expected. So now walk me through what we can expect on the sanctions side of things. Are we still on the same page? And is this it? Is this the trigger for the big one from the United States, from NATO members?
So let's just be clear. We just don't know yet, right? We know potentials that can happen, but we don't know what the full-fledged package is going to be like, because the U.S. has floated a number of things and actions and penalties they can take against Russia to try to deter Putin when they were releasing all of that intelligence. Two things we should note potentially. One, the other day when they went after two Russian banks that are very close to the Kremlin and the military, they did mention that two other bigger banks could be in view. They said this is the beginning of an invasion, this is the beginning of our response. And another official said that could be Sberbank and VTB, incredibly close to the Kremlin, and they also have a little bit more of a global reach. On the very far side, potentially could be this quote-unquote what they would call the nuclear option, and that would pulling Russia out of SWIFT. It would also potentially, another option would be cutting off Russian oil and gas. But these two items would be very difficult for European leaders and the President of the United States to swallow, because the blowback on their own economies would be, quite frankly, catastrophic in this environment of high inflation.
AMH.
So that is where we are right now.
I just want to bring up that Ian Bremmer tweet. The US will be rolling out maximum sanctions package against Russia today. Expect the same from the EU and the UK. His opinion over at Eurasia Group goes on to say it will have zero impact on Putin's behavior. Someone actually followed up to that tweet and asked him what would change his behavior, what would shape it. And I believe we catch up with Ian Bremmer a little bit later today. He said China deciding they won't tolerate his behavior. And what was fascinating about things overnight, Anne-Marie, in that Emergency Security Council meeting late Wednesday, China's ambassador to the UN, the only one who did not criticize Russia's actions. That's a secondary challenge to all of this, but Anne-Marie, it's there. I just wonder how big that effort's going to be to get the Chinese on side with what's happening at the moment.
It's not going to happen. China will not come on side. We've seen this time and time again. They are walking a very fine line. This is something that China, frankly, at some levels of the Communist Party, do not want to be dealing with. President Xi has a meeting coming up that is incredibly important, that will cement his legacy, give him an unprecedented third term, and they only do these kinds of meetings twice in a decade. This is what they want to focus on. They don't want to be dealing with what happens on these sanctions with Russia, what could potentially mean for anything and incursions we may potentially follow up with in the future. But we should note Russia and China have been growing incredibly close. This part of this is also financially. Russia's trying to do more in the yuan instead of the dollars. And this is where a lot of their energy goes as well. But they are the junior partner in this relationship. We should also make that very clear.
Anne-Marie, in a lighter time, we kid about your number of appearances in Vienna coffee houses at OPEC meetings. All the OPEC centrality is on Germany as well. And one name we have not mentioned this morning, Saudi Arabia. How will Riyadh react to this? What is the assumption of the White House?
So far, I haven't been able to get anyone in Riyadh to get on the phone with me just yet this morning, but the question is whether or not they will come to help in aid of trying to push down this oil price, because we are going to see higher oil prices and potentially even higher than we are now when we get a potentially harsher sanctions package coming out of the United States and European capitals. Listen, this has been a little bit underreported because so much focus has been on Russia, but 2 senior administrative officials have recently been to Saudi Arabia. A number of talks were happening. This was about Iran, this was about Yemen, but also about the stability of global oil prices. I read that as a potential ask to the kingdom to help out. But Jonathan has been bringing up a very good point as well. We're potentially close to Iranian nuclear deal. And for this administration, the timing of that with this oil market would be very useful. My question now is, does this now embolden the Iranians to make some more hardline gestures because they know the U.S. could really use their barrels in the market?
AMH. Great reporting, as always. Looking forward to hearing from the President, 12:30 Eastern Time down in Washington. Brent backing away from session highs. The state of the market looks like this. Equities off session lows. We're negative 1.4 on the S&P. On the NASDAQ, we're negative about 1%. Just getting away from those session lows just a little bit more. Lisa's been running you through the Fed speak that you can expect today. Bostic, Mester, Daly, Waller. We heard from Barkin. Now, if you're wondering how the Fed speak will navigate some of this, keep it vague. Lisa, here's the headline. The time will tell if the Ukraine situation changes the Fed outlook. Time will tell.
Yeah, basically, we're not going to give you anything because we don't know yet. They've always been saying uncertainty, uncertainty, uncertainty before it was shifted to inflation. Are they going to back away, though, from that and saying that perhaps the balance of risks is weighted more evenly between a number of different things, but you're not going to get guidance there. And frankly, not a lot of guidance as to what's going to happen over with Ukraine and Russia right now.
We're looking for some guidance now. Peter Oppenheimer of Goldman, first on equities, and then we'll catch up with Christian Malik of JP Morgan on crude. I want to get to you first, Peter, and thanks for being with us. Just a simple one. I've asked so many people. You've done the research. You've got an outlook. All your suggestions. What changed this morning? What did you have to rip up after what we've seen play out across Ukraine?
Hi, John. Yeah, look, I think that the markets respond in real time, and the most obvious impact of what we've seen in this escalation is just a rise in uncertainty, and that means a rise in risk premia. We estimate that each 20 basis point rise in risk premia knocks around 5% off the equity market, and we've seen something about twice that, which is quite large relative to historically what we've seen with political events. And it should be said that, generally speaking, political events, as long as they don't have big macro spillovers, tend to fade and you tend to get some kind of rally. Now, obviously, this is a very uncertain situation, and there are some major political and economic implications, not least of which, of course, is via energy prices. We were already seeing a fairly decent correction in most equity markets because of the fears of higher inflation and interest rates. Those that were more defensive and perhaps more value-orientated, particularly those in Europe, are now firmly in correction territory as well. But I would say that if we look at our tactical indicators, our risk appetite indicator, for example, the markets are now really pricing quite a big slowdown, and positioning has become quite negative. And typically from these sorts of levels in that indicator, we do get a rally.
So just a couple of days ago, I was speaking with a portfolio manager who represented a sea change, basically saying go toward Europe, go toward European equities and away from the U.S. because of the hiking cycle. Has that narrative completely got shifted, though, on its head, even with the valuation story, just simply because the risk is that much higher in that region?
Well, certainly Europe is much more exposed, both economically and, of course, in terms of proximity. But I don't think it really changes the fundamental underlying issues. First of all, the European economy is actually pretty robust at the moment, much different to the situation, say, after the financial crisis. To your point, the policy cycle is less aggressive in Europe. In fact, fiscal policy is still easing. Interest rates are likely, at least in the Eurozone, to be rising at a much slower pace. And we've got strong private sector balance sheets in Europe. We have more exposure to value, to energy stocks, and to other areas of the market that investors have been tilting towards. And we should also recognize that valuations are reasonably good. I mean, if you take the stock 600, for example, it's trading on a P of about 14 times now, having peaked at around 18. Much cheaper than the US and pretty much in line with its long-run average. So in the short term, of course, uncertainty is going to be a big drag to this market, but fundamentally, it looks reasonably sound, and we do remain actually overweight on a one-year view.
Peter, in your geography at the London School of Economics, which, folks, is world-class, even long ago and far away when Mr. Oppenheimer darkened the door, there's an idea of the European experiment. It is under threat today, Peter, as you and I have never seen, even with the collapse in '91. Frame for us this moment and how Europe must adapt. Which institution do you look for, or does Goldman Sachs look for, to provide a new stability for Europe?
Well, it's a great question, but we should emphasize that the institutional framework across Europe has strengthened dramatically since the days of the financial crisis and the sovereign debt crisis. Obviously, we've had a ramp up in the available instruments that can be used on a Europe-wide basis to deal with any systemic shocks, and that's a significant positive. And we should note that, for example, while sovereign spreads have widened a little bit in places like Italy, it's been very modest relative to what we've seen in previous periods where there've been heightened uncertainty. And I would say that from that perspective, things are looking a lot more robust. That being said, one of the critical issues for Europe, of course, is energy security. Europe has been ahead globally in terms of its focus on decarbonisation and ramping up investment in things like renewables. And I think this adds a new degree of urgency to that programme because that's what Europe is going to have to really agree on in order to become more independent in terms of its sources of energy.
Peter, great to catch up with you, sir. As always, a difficult moment for the continent and for the people of Ukraine. Thank you. Peter Oppenheimer at Goldman. Story in the equity market is we're off the lows. We're off the lows at the moment on the S&P. We're down by a little more than 1%. On the Nasdaq, we're only down 0.5%. Still a lot of pain in Europe. The DAX is down by 3 or 4 percentage points. But we're getting some ECB speak as well. And it's not just the line, Lisa. It's the individual with the line. Yes. It's Governor Holzman who says the Ukraine conflict may delay the stimulus exit, and that is one of the most hawkish members of the Governing Council suggesting that. That is an important headline from the ECB.
Earlier this week, he was out with some pretty hawkish proclamations about exiting more quickly. What he said more specific in an interview with Bloomberg News is it's clear that we're moving toward normalizing monetary policy. It's possible, however, that the speed may now be somewhat delayed. How much do we get this reiterated by others? But yes, he is one of the most hawkish members. The fact that he is coming out with this is really quite notable in terms of a sentiment shift.
And if you just quickly pull up a chart, Tom, of the Italian 10-year, off the back of that headline, that yield just shot lower. The Italian 10-year yield now down by 12 basis points on the day, down 12 basis points. A lot of that, Tom, coming after that headline from an ECB Governing Council member.
Well, you see the market react, folks. We see that across what's called Bloomberg Launchpad, and it's a red and green maze of data. Lisa's is different from John's, is different from mine, but everything just fired right up. My benchmark measurement of this, folks, is the Standard & Poor's volatility. The VIX 37-ish, and through the morning, we're now down to 34.29. What we're trying to do here, and we welcome all of you on radio and television to Bloomberg Surveillance on this historic day. We will be with you to 12 noon. David Weston scheduled to bring you the President of the United States in the 12 o'clock hour. And on radio and television, what I would suggest is we have a team behind us this morning killing themselves in London and New York to bring you the best voices. We welcome Christian Malik, head of EMA Energy Equity Research at JP Morgan and an exceptional student of the European continent and hydrocarbons. Christian, let me open with an inflammatory statement for you to react to. Can this be Riyadh to the rescue? Is this a moment where Riyadh can adjust hydrocarbon fears?
Well, when you think about, hey Tom, and thank you for the kind comments. I think when we think about OPEC's reaction function, we've got to think about what are they there for? They're there to step in if we see physical oil outages. In this context, we haven't seen oil outages, and therefore what we'd see them do effectively is manage a risk premium. But I'd remind you that when we saw this risk discount, I remember we had that first conversation back in November as oil prices were collapsing, OPEC didn't step in, Saudi didn't step in order to mute that decline because it was ultimately not linked to fundamental shifts in demand and or supply. Equally, while it's still early, we haven't seen any fundamental shift in supply, and therefore it's unlikely that we see OPEC respond, albeit that they will be looking very carefully at physical changes in supply and then responding, I think, as a result of that.
Christian, could we just get a gut check from you of how much your expectation for oil prices this year has changed as a result of this invasion of Ukraine?
I think when we highlighted the risk premium analysis back in November of oil prices potentially shooting to $125 this year and $150 next year, it was firmly on lack of spare capacity. And when I sort of link that to today and the last few weeks of events, when I think about the impact to that risk premium, I start with what has changed in terms of total spare capacity. You know, we have a very low number in our expectation, around 2.8 million. It's the lowest on the street. And when I think about the impact to that spare capacity, the question I'm asking is, well, will Russia's spare capacity be impacted? Now, potentially through financing and underwriting that spare capacity, we had Russia in the medium risk camp in terms of its ability to deliver production. Does it ever effectively move now into the high risk camp of delivering along the lines of Angola, Nigeria, and others? In which case, if it were to do that, that $30 risk premium is here to stay. It's not reversible. And that's regardless, Lisa, of whether we see a change in production from Russia. It's just they won't be able to deliver that spare capacity. They won't be able to live up to their quotas by virtue of not having the funding and the wells. In that context, we could see oil prices moving closer to $120 to $125 and stay there.
And stay there. How much does the Iranian deal potentially shift this equation back down to something that would be more comfortable, certainly for the United States and Europe?
Well, Iran would ultimately offer a relief valve in the context of being able to add additional barrels. But we are quite skeptical as to what Iran can offer at the moment, even if sanctions are removed. We wrote about this again in November that they could only potentially deliver over and above 500,000 barrels because of the lack of investment. If Nigeria is having problems and Kuwait's having problems, how is Iran able to deliver the spare capacity in that context? And therefore, we'd expect Iran to have a sort of muted impact in the context of limited spare capacity. It would offer relief, but it wouldn't fundamentally change the risk reward in oil at this point.
Christian, let's extend this conversation, if you can. I'd love to catch up a little bit more and talk about the commodity and then talk about the companies that are pulling this stuff out of the ground as well. Equities are off the lows. On the NASDAQ, we're down just 6 or 0.7%. Brutal start to the year, though, as you all know. On the S&P, we're down by 1.3%. We're down about 53 points on the S&P. A turnaround in the Italian bond market as well, Lisa. This is a notable headline from a known hawk of the ECB, that the Ukraine conflict may delay the stimulus exit. People might say that's obvious, but Lisa, we were trying to work out, because some people said it would make them go quicker, make them go slower for the Federal Reserve. It's still up in the air.
Well, people were saying that even Robert Holtzman himself was actually coming out and saying that perhaps the ECB should move faster. And that was earlier this week. So the pivot for him to come out and talk about a possible delay really underscores not only how quickly things are moving, but how much of a sea change this could potentially prompt amid some of the biggest central banks.
You're getting an important line as well from a US official, Tom, a defense official, expecting multiple phases of the Russian attacks. Have not seen Russian movements into Western Ukraine. Just goes on to say Russia used 75 fixed-wing, heavy and medium-sized bombers, Tom. Just a bit of detail right now.
And Chernobyl under attack. This is 60 miles north of Kiev, and there's just no question about it. Just below the Belarus border, there's heavy fighting near the former nuclear disaster.
From New York City this morning, good morning to you all. The coverage continues on TV, on radio for our audience worldwide. This is Bloomberg.
quantitative easing. That's when central banks buy securities to help keep financial conditions stable. But in 2022, that could all get kicked into reverse as central banks such as the Federal Reserve prepare to start reducing their balance sheets in a process called quantitative tightening. Strategists are still split on what the impact might be, but they're pointing to steeper yield curves and more pressure on risk assets. Greenflation. Inflation is all we've been talking about. But here's one with a new twist. Greenflation. ECB policymaker Isabel Schnabel said that measures such as a carbon tax could boost inflation in the euro area. And as for markets, they're betting on it, with commodity-focused hedge funds seeking to capitalize on the decarbonization push. Breaking out China. China has been a synonym for emerging market investing, with Chinese companies making up around half of key stock indices. But could it become the new Japan? Bond and stock portfolio managers are looking to carve out China from their investments, seeking to make the most of idiosyncratic trends within the markets and the wide breadth of opportunities. This is Market Bites. I'm Libby Cherry, and for more content like this, follow us on your favorite platforms.
We have to be able to give our customers vehicles, that are their primary vehicles that are EVs, and to be able to do that, we need to have range and infrastructure, and we need to remove the pain points, and so that's what we're doing.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is an extended edition of Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equities look like this about an hour into the session. We back off away from session lows, still down 1% on the Nasdaq. The S&P down by 1.5. A turnaround to the European bond market. Italian 10-year yields lower, much lower, as a known hawk on the governing council backs away from the idea of tightening anytime soon. Euro dollar breaks down as well. The dollar index is stronger, up by 1.4%. The dollar index 97.51. President Zelensky on Twitter, Tom, of Ukraine. I'll read it out verbatim. Russian occupation forces are trying to seize Chernobyl. Our defenders are giving their lives so that the tragedy of 1986 will not be repeated. We've reported this to the Swedish leader. This is a declaration of war, Tom, against the whole of Europe. That language, let's be very careful with that last line, Tom. That language from the Ukrainian president just moments ago.
And this is a story in motion here as we go to the president now. In 2 hours, President Biden will be speaking. And again, we are getting perspective. As from Christian Malik on oil moments ago, we are thrilled to bring you now the perspective of someone out of Florida and West Point who has a commanding understanding of Europe, working with Admiral Stavridis at NATO, and of course his leadership as former U.S. commanding general in Europe for American troops. Ben Hodges joins us today. General, thank you so much for joining us. I want you to convey to our listeners and viewers across this nation right now what is the number one thing our military can do to assist NATO and to assist Ukraine.
But the presence, Tom, of American soldiers is always such a powerful message of assurance to allies and also of warning to the Kremlin. The Kremlin does not want to take on the U.S. Army or Air Force or Navy, especially either alone or as part of NATO. So the deployment of American troops to the eastern flank of NATO, I think, was a good move and a strong signal.
If we further deploy Army to Lithuania, which you know encyclopedic, or we deploy Navy through the Bosphorus into the Black Sea as Ukraine begs Turkey to shut down the Bosphorus to Russian military ships, if we do that, how will that change it for Ukraine? What does it signal now for Ukraine?
Well, of course, Ukraine is not an island. It's strategically important for all of us, including Russia, because of where it sits on the Black Sea. It's why Catherine the Great stole Crimea back at the end of the 18th century. So Turkey, our ally, could really change the calculus for the Kremlin if Turkey were to close the straits, which it's entitled to do because of its sovereignty, to Russian Navy. That would make a significant impact on Russian thinking. What the United States and our allies are doing by reinforcing NATO's eastern flank, of course, tells the Russians, do not let this get out of control. Do not let it spill over into a NATO country, because then that will also completely change the situation.
What will you listen for from General Austin, now holding court as Secretary of Defense at the Pentagon?
I would like to hear him say that we are accelerating the delivery of weapon systems that Ukraine needs. I mean, we need something like a Berlin airlift in terms of quantity and speed to get more air defense systems, specifically.
Well, General, this is critical. Do we need to put U.S. troops in the Lviv right now to go across from Poland, a NATO country, X number of miles into Lviv, and set up camp in western Ukraine to say enough?
No, I agree with the president here that that we don't need to have NATO soldiers, American soldiers, inside Ukraine. But what we can do is, working with our Polish allies, establish a line of communication that can send what we call white convoys, non-military convoys, carrying all the stuff that Ukraine needs towards Lviv, and then the Ukrainians would distribute it onward. I think we don't want to get to a situation where, by our actions, we end up with Russians and Americans fighting each other.
Ben, just to give you a sense, the U.S. actually just put out this headline coming across: no new troop deployments currently planned, but possible. Why is it so important to not have troops necessarily in Ukraine from the United States? Why do you think that that is a tactical misstep?
So, or let me caveat that. I was disappointed when the 150 National Guardsmen from Florida actually were pulled out of their training mission that has been going on for 6 years there in Yavoriv. I wish that they were all still there. But when you bring in additional troops, this then looks like escalation, and keeping all of our allies together is an essential part of our resistance. And so I think that in this case, we want to avoid a situation that ends up with NATO forces going against Russian forces when it's not in a situation of Article 5.
Ben, there has been discussion from European nations about contributing more troops to NATO in the surrounding nations, not necessarily directly coming into conflict with Russia. What's your view on their capacity to increase troops, especially given the non-military action that you've seen from the likes of Germany post-World War II?
Well, it's a fair point. I think what we're going to see is NATO reconsider our compliance with the so-called NATO-Russia Founding Act, and that we will go to permanent basing in Estonia, Latvia, Lithuania, Poland, and Romania of U.S. and or other NATO troops. We have not done this in a good faith effort that, even though Russia had abrogated the NATO-Russia Founding Act, we were complying with the provisions that say no permanent basing. I think this is going to change, and I think we will see more NATO troops, particularly in the Baltic region. We really need to improve our air and missile defense in that region, and Germany and the Netherlands have a lot of capability where they could help here.
General, can I work through that line from the Ukrainian leader with you in real time? When you hear a line like this, Russian occupation forces are trying to seize the Chernobyl power plant. Our defenders are giving their lives so that the tragedy of 1986 will not be repeated. We've reported this to the Swedish leader. This is a declaration of war against the whole of Europe. Can you help me interpret that, General? What does that mean, that last line, when they go to somewhere like Chernobyl, and you know the history there? What does that mean?
So, two or three aspects to this. First of all, Ukrainian forces are achieving a lot of tactical successes against Russian forces. You won't get much coverage on this from Moscow, but for sure, lots of Russian aircraft, helicopters are being shot down, tanks are being destroyed. We're going to start seeing more and more video and reports of Russian losses, I think, as the situation becomes more clear. So that's important. Now, when President Zelensky, who I met 3 weeks ago in Kyiv, a tenacious guy, when he talks about declaration of war, of course, I don't take it in the means of a U.S. legal definition of declaration of war, but without a doubt, it is time for European leaders to be open-eyed and talk clearly about who we're dealing with. For sure, the Kremlin sees this as war, whether it's with ships, tanks, nuclear weapons, disinformation, cyber. Right. Russia is always in a war state of mind. It may not always involve weapons. In this case, I think President Zelensky is exactly right.
General Hodges, I want you to speak to the American people right now, and this is so urgent out of Vietnam, of the certitude of technology in military. And General Powell, of course, was steeped in that it didn't work, and that military was a tough thing with maximum force applied when needed. You're an infantry guy. When there's a silly phrase, boots on the ground, you lived it. Tell me, as an infantry guy, how we apply a Powell-like force against Mr. Putin.
Thank you, Tom. Well, of course, future war, which we're in already, will involve everything from drones, artificial intelligence, the advantages of quantum computing, but the disadvantages if our adversaries are using that, because that will break down the security of all of our IT systems, our communications networks. This is going to change things. And of course, their ability to disrupt our GPS targeting and navigating systems. So that's there. But what did we watch for the last 3 months? Endless video of rail cars carrying tanks and artillery and armored fighting vehicles, big steel Russian ships, submarines. So you get more new technology, but you still are going to have people in trenches, people still fighting with rockets and artillery. That's part of it. And Russia clearly intends to use blunt force. They're already employing this. But with more electronic warfare, they really have capability to jam that we have fallen behind.
General Hodges, we appreciate your time, sir, and thank you for being with us. Ben Hodges there, the former U.S. commanding general in Europe. What we've learned in the last 30 minutes or so is that we will hear from the President of the United States, President Biden, to speak about Russia and Ukraine at 12:30 Eastern Time in D.C. So, Tom, just a little less than 2 hours from now. Also heard from a defense official the following. Just a bit of color on what's happening on the ground, Tom. Important details. The Russian ground incursions began into Ukraine at around 5 a.m. Eastern Time. And U.S. officials estimate Russians have used 75 fixed-wing bombers and more than 100 missiles to attack. Just a bit of color, some detail there, Tom, on what's been happening on the ground.
Some of that is out on Twitter and, of course, unattributed, and we got to be very careful with it, John. But to get those numbers is really sobering, because social media stuff is happenstance, and it's one here, one there, 5 planes, 5 jets, 4 missiles. This isn't. This is a summation with some real authority.
Big headline from the Prime Minister, Tom. The Financial Times reporting this, that the Prime Minister, Elisa, is pushing for Russia to be ejected from the Swiss system. So let's just pause for a little bit, run through that, Lisa, the importance of that, the British Prime Minister pushing for it according to the FT.
Well, it would take time, but as Anne-Marie was saying, it's the Gmail, essentially, of the banking system. It is all of the nuts and bolts of how they connect all of the international banks. Kicking Russia out would effectively isolate that nation financially. And what Russia has said is that they would then cut off some of the gas and oil supplies in response. This would be the nuclear option. The fact that the United Kingdom is coming out for this is a massive step.
I want to be very clear, Tom. This is a report from the Financial Times on the British Prime Minister Boris Johnson pushing for Russia to be ejected from the SWIFT system. That's where we are now. Yeah, Russia's invaded Ukraine. Now we're thinking about the response. We're going to hear from the president at 12:30, Tom, in a couple of hours from now. And we need to see if they're all on the same page on the big sanctions we expected after a major move from the Russian president.
And with the presentation of U.S. intelligence over the last number of days, John, I wonder if we'll see a whole nother bout of intelligence. I would say just all the different reports here, the first order condition for Russia, not away from the Black Sea, is to take the airports. That seems to be the real thrust. I'll get it out. Thrust this morning.
Well, it's been a long morning, Tom. Let's go through the quote in that FT piece. The team putting this one together. It's according to one British official referring to his efforts to eject Russia from SWIFT. Johnson apparently also raised the idea at a meeting with the City of London executives yesterday. The quote, Tom, the Prime Minister is very keen on this. He's pushing it very hard. Let's see if he was successful on that call that took place, Tom, about an hour or so ago.
Working with us, of course, through the morning has been Michael McKee. He's Bloomberg economics and policy correspondent and can be a discussion of the Fed. But, Mike, I want you to take all of your political economic skills of decades with Bloomberg and sum them up into what you've learned in the last hour.
We don't know anything. That basically is what it comes down to. We're still in the fog of war. We don't know how long this is going to last. We don't know what sanctions are going to be imposed. We don't know what the Russian reaction to that is going to be. So right now, the price of war, you'd call it, are guesstimates only.
Are you surprised that Fed officials have not canceled speeches today?
No, the impact on the United States will be indirect, and the impact on the people across America will be indirect, most likely through inflation. So they do have the message to give that they will be on guard for that. So far, the only two Fed officials who have gotten out and spoken are Tom Barkin of Richmond, who says it's too soon to tell what's going on, and Pat Harker of Philadelphia, who is a substitute voter, will be until July when the Boston Fed takes over again. But he said we should only do 25 in March because the uncertainty of this. Then you had over in Europe, the ECB's Robert Holtzmann, the Austrian, who has been among the most hawkish members of the Governing Council, saying they should pull back. Maybe this is going to delay rate moves from the ECB.
Right.
So basically, everybody wants clarity before they say anything.
And just to give a sense of how big of a pivot this is, Robert Holtzmann was the one yesterday of the ECB who came out and said that perhaps the ECB ought to hike twice in 2022. Very much a hawkish statement. There is an issue, and we were speaking about this with Michael Darda of MKM Partners earlier this morning, Mike, this idea of a Fed mistake, a policy error being to actually take some key off from what we're seeing over with Russia and Ukraine and not hiking rates as much as people were expecting, that would be the policy error at a time when oil prices are only exacerbating the inflationary pressures. How many economists who you speak to are kind of emulating that kind of argument and saying, if anything, this should push the Fed harder?
Nobody's really saying it should push the Fed harder at this point because we've still got 3 weeks until the next Fed meeting, and they've got time to see what happens with the overall economy, and they were probably only going to do 25 in the first place. So if they did 25 in March, it doesn't leave them any worse off. The idea is inflation going to be even higher for significantly longer? Does it feed the energy inflation that we're going to get? Does that feed into the core? Fed isn't going to know that for some time yet, and that's the only thing that they're going to be concerned about at this point, unless we see the U.S. economy start to slow.
Mike, you know, a lot of people were worried that perhaps the Fed was out of ammunition to deal with the next downturn, perhaps the ECB even more so. How much are people talking about that this morning at a time when if the Fed holds off on rate hikes, they might miss the boat if some of the worst case scenarios come to fruition?
Well, it's not so much about being out of ammunition. It's about not having the right tools. The Fed basically has two. They can use quantitative easing, which only inflates markets and leads to more inflation at this point, or they can raise interest rates or lower interest rates, and neither one of those is going to affect Vladimir Putin. So until they have a better idea of what's going on, sidelined is probably better, and it isn't going to be the central banks who can make a big difference. Now, we know that the president of the European Central Bank, Christine Lagarde, is coming out tomorrow. She's already scheduled a news conference, and I think what that may tell us is that there will be a banking aspect to this, and that's where the central banks come in, because they'll have to enforce some of this. And also, if there is a problem with the system, they will announce that they're providing enough liquidity to keep everything going. Beyond that, it's up to the politicians and the generals at this point.
Mike McKee, thank you, sir. Thank you very much. Equities down 0.7 on the Nasdaq, dancing around that level for the last hour. On the S&P, we're down by 1.26%. I'd like to, if we can, Tom, just work through this Financial Times story, because some tremendous reporting coming together on the Prime Minister, Boris Johnson. He's very keen on this. He's pushing it very hard. This being to get Russia ejected from the SWIFT payment system. But it's the second paragraph that stands out here, Tom. Let me read it for you. This is the difficulty of the moment now. Quote, however, Olaf Scholz, the German Chancellor, warned Johnson on Thursday that his country would not support such a dramatic move, and neither would the EU, according to officials close to sanctions negotiations. Tom, that's the difficulty of this moment, for these leaders to get on the same page on how to respond to what's happened in Ukraine.
My understanding of this is the United Kingdom is removed from the hydrocarbon pressures of continental Europe. But, John, I'm going to be blunt. The dialogue has changed for everybody, including Team Surveillance here, in 24 hours. What was said on Thursday, Wednesday last, Monday last, it doesn't matter anymore. The reported news flow militarily and anecdotally, and I thought General Hodges was just brilliant. It's just simple, John. I would suggest the news flow coming to these politicians will stun them in the next 6 to 12 hours.
Lisa, what the Prime Minister of the UK wants is a very different story to what apparently, reportedly, Chancellor Scholz would like to see today.
And it really highlights also some of the divisions. I mean, people have accused him of having pea shooter sanctions in response to Russia's invading of Ukraine. How much dissonance is there? Are we going to start to see some of those fissures in more cold relief at this point, now that they actually have to do something?
I want to get to Will Kennedy over in London just to build this story out a little bit more. Will, to talk about the commodity market and to work out what some of these sanctions might mean for your world as well. We've backed away from that 100 level on WTI at 97.62. On Brent, we're still in the 100s. Will, if I can come to you now, what are you expecting from EU leaders, from the President of the United States, the kind of sanctions we can expect that are announced today?
Well, I think that what's happened so far in the oil market, apart from the huge run-up we've seen in prices, John, is that traders are very reluctant to deal in Russian crude because they don't know what the sanctions are going to be. We've seen the trading of physical Russian crude sort of grind to a halt because there are a lot of refiners that don't want to touch it, and they're worried that sanctions either directly on Russian energy or on the financial system are going to make it very, very, very hard to deal in Russian commodities. And that's one of the reasons that we've seen prices jump this morning. So they'll be carefully passing whatever's announced those politicians, not just for direct mention of oil and hydrocarbons, but financial sanctions that make it hard to finance, buy, trade Russian commodities.
Well, Europe's in for a difficult time, and we know the President of the United States has tried very hard to keep the Europeans on side as they go forward with this effort to respond to Russia. There are a couple of options on the table. In fact, I can think of three. There is a gas tax holiday, another oil reserve release, which didn't have much of an effect and impact on this crude market a couple of months ago, and an Iranian deal. Of those three things right now, Will, what's the most possible from what you look at?
Well, I think all of that's on the table because they'll be desperate to temper the impact of this increase. But I think there are other things that we need to think about as well. What we didn't get in November, because there wasn't a reason for it, was a coordinated IEA release. And that's on the table now. We've got a major geopolitical event. The IEA may coordinate a stockpile release across all the industrial countries. That's something we should be watching for over the coming days, I believe. And then, of course, there's OPEC. I think that Saudi Arabia and Abu Dhabi are going to come under huge pressure from Washington, but not just Washington, from Tokyo, from Seoul, from New Delhi, to say, as Tom said, everything we knew yesterday, forget it. We're in a whole new world and we need action. And I think for the Saudis and the Emiratis, they're going to come under a huge amount of pressure to add oil to the market.
The Saudi and the Abu Dhabi leadership and the pressures they will face, what is the power of, say, America to apply pressure on them? Or is it a more domestic and internal pressure of their royal families that, hey, we're part of this, we've got to help solve it? Which is it?
I mean, I think they're in a very difficult position because clearly they're allies with Moscow and the OPEC Plus alliance, and they would rather not get involved. But I think Washington is going to be very intense and say, you know, we have a long-standing alliance. We help guarantee your security. Now's the time to help us out at this moment of huge international crisis. I think that Washington will be putting a huge amount of pressure. But I wouldn't discount the pressure that's coming from their big Asian customers as well. They're going to get it from both sides, Tom.
The policy's coming together now in real time. We have the reports and we're hearing from the leadership themselves. This was the report from the Financial Times that the Prime Minister of the UK, Boris Johnson, is very keen on pushing Russia, ejecting them from the SWIFT payment system. We know, according to FT reporting, that Chancellor Scholz is less keen on that. Lisa, moments ago, You caught this one. Ukrainian foreign minister had this to say: "I will not be diplomatic on this. Everyone who now doubts whether Russia should be banned from SWIFT has to understand that the blood of innocent Ukrainian men, women and children will be on their hands too." Capitalized, Lisa. Ban Russia from SWIFT.
I think the most telling aspect is Olaf Scholz saying that he cannot get behind this right now, at least according to the Financial Times reporting. To give some perspective on this, Russia has said that this is the nuclear option and that they would respond by cutting off oil and gas supplies at a time when gas prices, natural gas prices in the European Union right now have been surging intraday more than 50%. How do they justify bearing the cost in the population at a time when they don't have that many replacements and we're not hearing about a sustainable system to supply them with gas and oil?
Tom, that's the issue, isn't it? We're doing this in real time.
Well, we're doing it in real time, and I'm going to be honest and direct in that we're starting to get images. They're rare images, but they're out on social, John, that really begin to show the bloodshed that the foreign minister was just speaking about. You wonder about the future of the leaders as Kiev is under attack from Belarus to the north. Russia's taken out the airports by all reports, John, and you just wonder the distance from those airports to central Kiev, the distance. The New York Times with a map showing 3 separate far western Ukrainian incursions where there's been events with the Russians. It is exceptionally fluid here to what, John, 90 minutes to the president's comments.
12:30 Eastern time, a dark day for that country. Lisa, the moves that we're seeing in commodities. Natural gas, where are we now?
Up 60%, 59.6%, just to give some sense. And it's good that Tom was mentioning the bloodshed. It is bizarre sometimes to talk about markets at a time of serious individual distress and families fleeing nations. This is what people are trying to game out in terms of the longer-term ramifications, and natural gas front and center, particularly for Germany, for France, for a lot of the continental European nations.
Is Will still there? Will, I'd love for you to have a final word just on natural gas. The dynamic we've seen, not just over the last few weeks, but over the last 12 months, Will. We've already had an energy shock, and we handled 2.
Yeah, I mean, it's an enormous move. I think my final thought would be this is across all commodities. Oil, we've discussed. Natural gas, huge moves. Don't forget about food. At the moment, we can't export. Exports of wheat from the Ukraine have stopped, ground to a halt. Wheat prices are up to a 9-year high. They rose 15% in Paris this morning. This is going to be an inflationary shock from lots of different directions, energy, but also food. And I think we're only just beginning to process how big the impact can be.
Will Kennedy, thank you, sir. Just to go over some of this again, just the latest as the response comes together from the Europeans, from the UK, from the US. We're going to hear from the president at about 12:30 Eastern time. Sometimes that's late, Tom. Given the moment, it might be late again, but that's the marker, the one to watch. It's in the diary. The FT reporting that the British Prime Minister is pushing to eject Russia from the SWIFT payment system. They're also reporting that Chancellor Scholz is reluctant to do so. The Ukrainian foreign minister, very public, straight out there on Twitter, Tom, saying, get it done.
We've got a team in London and New York working on this morning, folks. And John, I am thrilled to tell you that Angela Stent will join us here. Her book, Putin's World, is definitive. She's with Brookings. She will join us before the president speaks.
We'll run you through the price action ahead of that too. We're down 1% on the S&P. Where are we now? About 90 minutes into the session, down 1%. In the NASDAQ, on the NASDAQ 100, we're only down 1/3 of 1%. Call it a quarter now. So this pain was global for the equity market. It's starting to become just a little bit more regional as we back away from the lows on the NASDAQ.
Yes.
And we're down about 4% on the equity benchmark in Frankfurt, Germany. Another round with Tom Keene, Lisa Abramovitz and Jonathan Ferro on radio, on TV, for our audience worldwide. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the House for business's greatest minds.
The questions about risks, for example, those issues around macroeconomics, when you think about the healthcare scare, cyber continues to be one that's very expensive as you've had much more digitization and expenditure in the digital space.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
It is President Putin who is bringing war back to Europe.
This is a deliberate, cold-blooded, and long-planned invasion.
The United States, together with our allies, will defend every inch of NATO territory.
Today, in concert with our allies, we will agree a massive package of economic sanctions.
The Russian leadership will face unprecedented isolation.
This is an extended edition of Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
The power of those words. Lost on nobody, bringing war back to Europe. From New York City this morning, good morning, with Tom Keene, Elisa Bravis and Jonathan Ferro. Your equity market down by 1.23% on the S&P. From the G7, Tom, a headline reads as follows: bringing forward severe, coordinated economic and financial sanctions, condemning Belarus's involvement in aggression against Ukraine.
And what's so important here, John, it is the worst outcome of all the speculation we've seen, including the president's leadership with a new use of American intelligence. To me, John, the dominant theme here as we go into these important speeches this morning, the military action in Ukraine, is, I didn't know this, Ukraine is 785 miles wide east to west. We're learning that this morning.
90 minutes away, Tom, from an address from the President of the United States down in D.C. What are you looking for?
What I'm looking for from the president is a complete application of the sanctions, obviously critical, as Bloomberg is expert on, as his SWIFT mumbo jumbo. I get that. We're gonna see the sanction statement, but we need to see, as General Hodges mentioned, and I believe it was our last hour, we need to see what the troop deployment of NATO is, because General Hodges said Putin will not go after America.
We've got to work through the price action as well, Lisa. Some heavy losses in Europe. Let's be clear about that. The equity benchmark in Frankfurt, Germany, down 4%. We're just about off the lows. On the Nasdaq, we're down. Where are we now? On Nasdaq 100, we're down by about 0.25%. So we're really off the lows on the Nasdaq in a big way. In the bond market, yields come in 6 basis points to 193.55. That's the story on a 10-year in the commodity market, Lisa. Crude up by 6% to 97.40.
But well off where it was earlier today, the idea that it could reach $100 and then come back down. Today, we are going to hear from President Biden at 12:30 p.m. He will be talking perhaps about the measures against Russia because of the invasion of Ukraine. Will he mention the SWIFT system? Will he talk about perhaps removing some of the Russian banks from the financial network, the really bolts and nuts of the entire global financial system? European Union leaders are also holding an emergency summit today at 2 p.m. also to discuss what they would like to see? Do we hear from Olaf Scholz in terms of what he wants to see and how much he is willing to accept when it comes to higher oil and gas prices at a time when gas prices in the region are surging by 60% intraday? And today we hear a host of additional Fed speakers. We did hear from Tom Barkin and others. We also are hearing from Cleveland Fed President Loretta Mester, Mary Daly, and Chris Waller. How much do they reassess the path of rate hikes given some of the developments? Do they just give sort of wishy-washy discussions? Tom Barkin earlier saying, look, we have to see, wait and see. So how long do they wait, and what are they looking for to determine the path, John?
Well, Lisa, we did hear from the ECB, didn't we?
Yes.
Governor Holtzman. And I thought that was interesting. Well, I mean, he's changed his mind in 24 hours. That just shows you how dramatic things have shifted, how dramatically they've shifted, Lisa, and very quickly as well.
Yesterday, he came out and he said that perhaps they could see 2 rate hikes for the ECB in 2022. Today, he comes out and he says perhaps we should delay the pace of hiking rates in the face of some of this economic uncertainty.
That's the story out of Europe, Tom. We've got to talk about the euro as well. Euro currency pairs with a big move, Tom. Euro dollar, the move by 1.6% on the day. And Euro Swissy, we've been on top of that as well, Tom, in the Swissy's favor. The biggest move since 2019.
What you do in the Bloomberg, folks, is you triangulate currency pairs. So, John, critically here, euro sterling almost confirms the abrupt euro weakness against dollar. We're not quite there, but to see euro sterling, euro stronger would be a really bold statement into the president's, a market statement into the president's speech.
And just on the energy side of things as well, Tom, that line from the G7, just getting another headline for you. Leaders say they're standing ready to act on global energy markets. That's the color we want. That's the color we want from the president at 12:30. What's the response on the energy front? If they're willing to do something on Russia 1 and 2, how they're looking to offset it too.
Well, the three of us have been doing this here for a few hours. I've been kept going by Tang and Pop-Tarts. It's been great. But, John, seriously, do the three of us agree that the single point to listen for financially from the president is the SWIFT system?
Yes, 1 and 2, energy. Energy is the elephant in the room here for the Europeans. That's the wedge between them. They've been united in such a massive way, Lisa, over the last several months. They've all stayed on the same page. When it comes to energy, will that be the case if they try and make an effort there too?
Well, you have Prime Minister Boris Johnson coming out and taking a hard line, but he is less vulnerable to the gas lines of Russia than Germany. So he has a different reality that he's facing, and you're already starting to see the breaches in that unity. How much can they pull it together so quickly, given how quickly this invasion has unfolded?
Again, we welcome you for this special coverage on radio and television. And with us all morning, Anne-Marie Horton at the White House, where President Biden will speak, and now Maria Tadeo in Brussels. Maria, the Twitter feed is no fun. It gets grimmer. We're starting to see bodies. We're starting to see injuries. I saw a subway station used in a bomb shelter in Kharkiv as well. Give us this moment of violence in Ukraine and what it means for Brussels and the diplomats of Europe.
Well, Tom, people here are completely horrified by the pictures and the information that we have. We know there's now very heavy fighting in eastern Ukraine, but we also know it's affecting the area of Odessa, and we also know there's heavy fighting going on in Belarus. Remember, the amount of times that Vladimir Putin and Lukashenko, the leader of Belarus, told us there was going to be no invasion from Belarus, that all of this was American panic and hysteria. Well, now we're seeing troops moving from Belarus and moving fast. The focus here will be on the capital of Ukraine. Tom, you know that whenever there's an armed conflict, whenever it's a war, the capital city is always a big prize. This would be a huge propaganda win for Vladimir Putin to say we were there in 24 hours. The other big issue, however, is that the entire Ukrainian government at this point stays put, and Zelensky says he's not going to leave, that this country is going to fight this out. There's big questions, and again, I don't want to speculate, and I want to be very careful here, but of course there's big questions as to what happens if Zelensky does find himself in a situation where he's confronted very closely with Russian troops. We do know, and the Russians have made it clear, that what they want is this government out. The way, or the question, is how.
The language was so strong this morning to say we need to demilitarize the country to replace its leaders, and the Ukrainians want a response, and they want it now. Anne-Marie, you caught up with the foreign minister yesterday. His words this morning and on Twitter. Let's calmly go through this together. I will not be diplomatic on this. Everyone who now doubts whether Russia should be banned from SWIFT has to understand that the blood of innocent Ukrainian men, women and children will be on their hands too. Ban Russia from SWIFT. Do you get the feeling that these talks around issues like this, Anne-Marie, are still ongoing, happening right now in real time?
I imagine when it comes to SWIFT, it is, because the Financial Times is reporting that Boris Johnson wants to take that action, and then you have the likes of Olaf Scholz saying that potentially goes too far because the blowback on our own financial systems and economies will be too harsh, and Downing Street even conceding to the Financial Times reporting that if we were to do blocking of SWIFT for Russia, we would have to do it internationally. The UK is not going to do it. It has to be all along together, all of the Western leaders cajoling around this idea. I imagine, given the fact that the FT is reporting about this, they're still talking about the harshest measures. What we could potentially see, though, are harsh sanctions today, and then potentially other measures Friday, Monday, Tuesday. How much can a system absorb in one day? Will they potentially want to elongate this and create a little bit of unclarity for the Kremlin about what exactly is going to be hit in their economy?
Anne-Marie, where does the U.S. stand on the SWIFT payment system, given the fact that they are also going to be so significantly affected by higher gas and oil prices, and they do have the alliance with Germany, but also the closer tie to the United Kingdom?
At the moment, we don't know what their position is on taking on SWIFT at this moment. What we do know is that officials have constantly told us everything is on the table, including SWIFT. So at this moment, I would take them for their word over the past few weeks that SWIFT is on the table. But the cynic in me, knowing how catastrophic that potentially could be, I do not think, personally, given a lot of analysts I've spoken to, that that would be a measure they're willing to take at this moment.
When the president speaks, does he come out and make an abrupt statement and take questions, Anne-Marie? I mean, I'm fascinated about the methodology here, the ballet of it, the choreography of it. What do you expect to see at 12:30?
I don't think he's going to come out and immediately lead with the financial sanctions and the penalties that he's going to put on Russia. I think first he's going to offer his deepest sympathies to the Ukrainian people at this moment. As Maria has talked about, there is violence right now across Ukraine. There is going to be a mass refugee crisis. Already, Hungarian television is talking about this. You have people fleeing Ukraine, given what is going on right now. And you have legislators in the Duma in Russia talking about the fact that they want a new government. So the president is going to lead with that. And then he is probably most likely going to have very choice words for President Putin, who at this moment has really altered the future of Europe.
I mean, what's so important here, John, to my question, and it was a serious question, Anne-Marie's too young to know this, but there used to be a thing where presidents spoke in the evening to America. And then in the new digital world, the new news cycle, those days are over. We're prosecuting, John, a major war in a modern Twitter sphere.
And Tom, let's be clear, though, the president today, who's he speaking to? He's speaking to the Russians. He's speaking to the Ukrainians.
I agree with that.
And he's speaking to his European partners.
I agree with that, John.
Doing it in the evening is just not going to work.
Fair statement, plus it's their early evening in Europe. But, John, to your point, this is not about the election in November. We've gone way beyond that.
Anne-Marie Jourdain, down in D.C. Maria Tadeo, out of Brussels. Got to talk about this market, Lisa. Equities off the lows, well off the lows on the NASDAQ. Seeing tremendous pain there year to date. Down and down hard. We're off by 1/3% now on the NASDAQ 100. On the S&P, we're down by 0.9%. Looking at the bond market, yields come in about 5 basis points.
Yeah.
On 10s to 193.90. We've given up about half of the move this morning, Lisa. Just seems to me that this started as a global story and has shifted a little bit more towards a regional one as the hours have gone by.
And to sort of solidify that idea, the Federal Reserve Bank of San Francisco President Mary Daly just speaking, and she had the opposite tone from Robert Holtzman over at the ECB saying, I don't see anything right now that would disrupt our plans to move the rate up, that she talks about the geopolitical situation as part of a greater uncertainty, but at the same time, inflation very much at the forefront. So talking about the divergent fates, it really is not so clear that the Fed will move away from some of that dovish proclamations that people were expecting, even if the ECB is.
The NASDAQ very close to turning positive. The NASDAQ down by 0.08%. Let's get to Pete Shafrick, shall we? Global macro strategist at RBC. Peter, let's start here. We hear from the president at 12:30 Eastern, so about an hour and 20 minutes. I want to understand, and we've been asking this question of everybody, what changed for you this morning? What changed for you as you look across your forecast, the research you've put out over the last few months? What's changed for you, Peter?
Well, first of all, I mean, the risk that we've all been talking about now for weeks has crystallized. So it's not sort of a probability event anymore. It has happened, and it's happening right in front of our eyes. Secondly, we sort of, at least at the beginning, we know the extent of some of the increases in particularly the energy prices. And I think the next big question mark is, as you just have been talking about, what's the response, particularly over here in Europe, of the ECB, potentially the Bank of England. So what has changed for me is that the risk spectrum has narrowed quite significantly, and one of the key risk events has actually happened.
There has been a big sea change, shift toward Europe over the past couple of weeks, with a lot of fund managers saying they see greater potential rewards from European equities. Does this change that based on the higher vulnerability to gas prices, oil prices, and the more, I guess, limited response that the ECB has?
I think to some degree it has. In my mind, what it does is it increases in the short term the inflation risk potentially quite significantly. And when you look at sort of what the market has been pricing, 2-year inflation swaps have been up 40, 50 basis points today. So it increases that. But, you know, one of the things for Europe in particular that's missing is we don't have wages going up. So any increase in inflation decreases purchasing power, and that decreases consumption expectations, and that potentially decreases GDP growth. And ultimately, I think that's sort of what's playing out. And I think that's much more severe here in Europe than it is potentially in North America. So, and I think that's what's crystallizing here.
Or at least that North American-European split. You can see European equities are still down hard. We talked about it briefly just moments ago. We have turned green on the NASDAQ. Erased losses of more than 3% to turn positive by 1/10%.
This just, given the fact that these stocks were down by more than 3% intraday at one point, given some of the concerns around supply chains, all shrugged off. The buy the dip moment very much in the forefront. Peter, was this a buy the dip moment for the United States, even if not for Russia, not for Europe? Or is this just basically a head fake for a broader conflict, especially with oil prices where they are?
Well, I'm not quite sure whether this is sort of a broader conflict. We've heard before, I mean, President Biden said we're going to defend NATO territory. So I don't think that this specific conflict here is going to be broadening out. We'll have to see, obviously, how it pans out and how long it takes. But it appears to me that sort of this is at least for the time being, is an isolated one. And the response is very much going to come in the sanctions arena, as you've been talking about. I mean, keep in mind, a lot of the European companies in particularly also the European banks, have quite a lot of ties into Russia, stronger ties potentially than the North American companies have. And again, sort of the direct impact on the broader macroeconomic scene here in Europe is so much stronger than it is potentially in North America. The dependency on oil and gas in particular is much, much stronger. So therefore, I can definitely see sort of that the impact between the two markets is quite uneven.
Peter Shafrick, I want to touch on your heritage, your work at Goethe University in Frankfurt, and all that you've done in Germany. From where you sit in this crisis representing RBC, I understand that. Are you looking at a new Germany after Merkel, or do we overplay that?
Well, it is to some degree. I mean, first of all, I'm in the UK now for more than 15 years, but obviously I follow the situation in Germany very closely. It is a different one. I mean, we know that Merkel had very close ties with, well, not close ties, that's wrong, had a very good sort of line into Putin. She spoke Russian. So the two had a much better diplomatic effort here. And we know, for instance, that the new administration has a much more sort of pacifistic wing to it. And whether or not that plays out remains to be seen. We really have to see that. So, but I do think there's a potentially a different response from Germany coming here. Whether it's been foisted upon them through events, that could well be the case. And keep in mind, the last time we had sort of a centre-left government in Germany, this was the time of the Balkan Wars, and Germany was involved in that as well. So I reckon the events will overtake what the government ultimately initially wanted to do.
Peter, overcome by events, as always. Peter Shafrick of RBC. Equities well off the lows in the United States on the NASDAQ and on the S&P 500. In the bond market, well off the lows too. We're down 6 basis points on 10s to 193 on 2s. Let's work through the front end of the yield curve just briefly. So on a 2-year yield, at the lows we were down by 14 basis points. Now we're down just 6 at 154. On the ECB side of things, we heard from Governor Holtzman a couple of hours ago, who said that maybe we have to slow down the effort to tighten monetary policy and remove accommodation, slow down that effort. Then we've heard from President Daly. So, Lisa, I really want to frame this, that we've heard from a hawkish ECB member that sounds dovish, and we've just heard from a dovish Federal Reserve member who sounds somewhat hawkish still, because as far as Mary Daly is concerned, and here's the quote, the line, the headline, we need to tighten policy.
Yeah, and it's not clear that the geopolitical situation really alters that. Just not only her, but also Raphael Bostic coming out also pretty much at the same time and saying that the Fed needs to return to a more normalized stance. So very much a similar kind of commentary as we heard from Mary Daly. It really highlights what we've been talking about all morning, which is the divergent fates of both the European and the U.S. economies at a time of very different vulnerabilities and different strength in the recovery from the pandemic. Does the Fed continue to go ahead, and can U.S. markets diverge significantly as the economies do in terms of vulnerability?
These are the fundamentals, Tom. It's the emotion of the moment as well. To hear some of the language used by European leaders, Ursula von der Leyen, the European Commission president, to say wars come back to Europe, to hear the president of Russia say things like, we want to demilitarize the country and replace its leaders. That's where we're at this morning, Tom. It's escalated, it's moved quickly, and it's now about regime change for the Russians in a way that maybe it wasn't in the minds of so many people, Tom, up until recently.
And the president's speaking here in a moment, in an hour and 15 minutes. And folks, it's real simple. The story is changing by the 20 minutes in the new speed of imagery, the new speed of digital. Some of the images shocking out on Twitter this morning. When I first read Timothy Ash many years ago, I'm going to guess at Bear Stearns, but I really can't remember, Tim. And the answer is it jumped off the page. Tim Ash is one of the most acute writers and thinkers on Europe and strategy. He is senior EM sovereign strategist at Blue Bay on this historic day. Tim Ash, thank you so much for taking time with us today. I want to focus on the EM of Eastern Europe. Take us from Estonia down to Poland. What is your biggest worry as Putin attacks?
Well, the biggest worry for the market is Russia itself, right? I mean, I think as has been mentioned, I mean, this is the biggest, it's a systemic geopolitical event in Europe, the biggest one since the Second World War. Remember, we had the fall of the Berlin Wall, which was a positive. This is a big negative. And I think, those countries surrounding Ukraine and Russia, the Baltics, Poland, Romania, will be very worried now. I mean, I don't think Putin is going beyond Ukraine. But I think this is a game changer in terms of European security. I mean, NATO has got to really step up its act. We're going to see a big increases in defense spending because of this. But at the moment, the focus really is on Russian markets, and they've been collapsing today. I mean, lots of talk about Fortress Russia. Interestingly, Russians themselves didn't see this coming, and I think they've been panic selling across the board of Russian assets. Russians didn't believe their own leaders on this one, which is why Russian assets have been falling so aggressively today.
Tim, we worked through this together 8 years ago over Crimea when I was in London, and Tim, this is different, and it's different. And as you say, Fortress Russia, a lot of people have talked about that recently, that President Putin prepared for this moment, has tried to insulate the economy, run a budget surplus, raise capital. Tim, just how insulated are they?
Well, I was the first person to coin the phrase Fortress Russia back in 2015. And Putin's been planning this. This has been all about building those balance sheets. He's been determined to go into Ukraine for a long time. I've written it. I argued it back in 2015. There was likely to be a defining war between Russia and Ukraine. And this is it, unfortunately. Now, Russia, it has the balance sheet. But the level of sanctions we're likely to see because of this, it's going to be pariah Russia, pariah Putin. And it's going to be very difficult to do any business with Russia. That means higher borrowing costs, less investment, less growth, lower living standards. And Russians already are not really happy with their lot in life. Remember, in Kazakhstan, we had some social arrests recently because of precisely that point. So this makes Russia weaker. Likely, if it's regime change in Ukraine, what's likely to happen is that any new government that emerges in Ukraine will be sanctioned by the West as well. So Russia will have to pay the cost of rebuilding Ukraine and Belarus, and its economy is going to be in a pretty dire state because of sanctions.
Tim, what's the fallout for the broader emerging market complex, given the fact that food prices are likely to surge, given the fact that wheat production could be disrupted, all of the potential commodity complex eruptions that we're seeing today feeding out into the importers in the emerging market world?
Look, I mean, the market was so sanguine about this, right? I mean, it assumed it wasn't going to be a globally systemic event. It is, right? I mean, this is about hardcore European security. It's about energy. It's about, heating European homes. And I think the fallout, as we're seeing today, is very, very significant. Energy prices higher, supply disruptions. Are there going to be disruptions in manufacturing production in Europe because of this? In emerging markets, it's about energy importers versus energy exporters. Places like Turkey, Central Europe, Asia. They import a lot of energy. They're going to be hit by, higher inflation. And globally, it's stagflation, I guess, is the fear here.
Timothy Ash, what is the power of, I'm going to say, dominant, more visible, more stable emerging market nations? What is the power in place here of, say, India or Indonesia, or to bring it over to Europe, Latvia? What are their power right now?
Well, I said not much, unfortunately. A lot of emerging markets have lots of structural issues, reform issues. I mentioned winners and losers in terms of the energy balance. India is a huge energy importer, as is Turkey. So I think, people are just waiting to see how this pans out, what it means for global commodity prices. You mentioned already global central banks, how are they going to respond to this? Pretty uncertain, but, geopolitics matters, and it's here to stay. And as I said, this is a game changer.
Tim, you used the stagflation word moments ago. Who's that for? The whole region or one particular country?
Well, globally, right? I mean,
you think a global story, back to stagflation, that's the ultimate story now, not just a tail risk. Is that your base case?
Stagflation is lower growth, high inflation. The risk here is that we see further supply disruptions around energy, and that hits global growth. And inflation is here. That's the reality. As consumers, we know that. Central banks might be trying to sell us a different story, but we all see inflation, and it's hard to see it falling quickly. And certainly this episode will not help that.
Tim, wonderful to catch up with you. Tim Ash there,
thank you.
Of Blue Bay. The S word, Lisa, and not just a tail risk, the reality for many people today.
It depends where, though. Is it stagflation, the S word in Europe, but not necessarily in the U.S.? And that, I think, is the tension that we're seeing on both sides of the Atlantic in markets.
Some pain in this equity market. We recover, though, Tom. We're flat on the NASDAQ. We're flat on the Russell. The S&P's down 0.8%. But the commodity moves, Tom, they've been huge.
Two moments, John, I want to capture. Right now, Mr. Putin in Russia. This is off the Russian feed here, and I guess it's business as usual in Moscow. They just showed Mr. Putin, and he's speaking to a group of business people as well. John, I really want to emphasize here what Javier Blas said. Accounts have to settle, John, sometimes hourly, but definitely on a daily basis. The size of the margin calls tonight throughout the commodity trading industry is going to be simply humongous. And this time, it isn't just gas, it's everything, and flat prices are higher too. Credit lines are going to be stretched everywhere. We forget that, John, that in the world of finance, you got to show your cards, you got to settle every day.
Yeah, when you move this quickly, and I know it sounds a little cliche, but I'm sure it'll resonate with a lot of people. Lisa, when you move this fast, things break. And things have moved really quickly in a big way in several parts of the market.
We're seeing moves that are the biggest since March 2020, which we know what happened then. And at what point does it become a financial system issue? And that is really the concern for a lot of people when they see some of the distortions. I mean, that's why it really caught my attention that 1 month T-bill yields were so deeply negative. How much is that sort of dive for cash going to ruffle things?
The coverage continues with Tom Keene, Lisa Abramovitz, and Jonathan Ferro from New York City for our audience worldwide on TV and on radio. The extended coverage for another 30 minutes. This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is an extended edition of Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
We're wrapping up a pretty brutal session over in Europe, and here are the closing prices on the FTSE, the DAX, and the CAC 40 over in Paris, France. The FTSE 100 down by 3.9%. On the DAX, we're down by more than 4%. The CAC 40 off by 4 percentage points as well. Lisa, we talked about this a few times this morning. These issues for markets start off global and then they get regional. And globally speaking, the US is well off the lows. The NASDAQ is essentially unchanged. The Russell essentially unchanged. The S&P is down, call it 1%. The moves in Europe, though, have been huge. And the European banks, some of those names, Lisa, have been hammered.
Well, they've been hammered as the ECB starts to shift its tone on the margins while the Federal Reserve does not. Well, they start to talk about the need to perhaps slow their exit from stimulus as you talk about oil prices and gas prices surging 50-60% intraday. John, at what point do you have a crisis that is specific, that is very difficult to target with central banks that are already below zero?
So we've heard from a couple of Fed speakers, and I know we've got a couple more still to come. Let's go through those comments together, Lisa. The Fed President, Mary Daly, saying, quote, "We need to tighten policy." Raphael Bostic of Atlanta, the Fed president, saying appropriate to move away from emergency policy stance. Now, we've all been trying to work out what this would mean for the March 16th meeting, and let's be clear, we still have some data. We have another payrolls report early next month. We have another CPI report as well on March 10th. Have you got a decent feel for things based on the Fed speakers we've heard from so far?
It seems like they're prepared to raise rates by 25 basis points at the March meeting. There is nothing to indicate that they are not. Raphael Bostic of the Atlanta Fed did come out and say that he is open to changing rate forecasts, that he did see previously 3 25 basis point hikes this year, which would be well below what the market is currently pricing in. It does seem like they are more aware and wary, frankly, of the geopolitical risks. But frankly, again, why was it, John, that we were talking earlier this week about how perhaps the Fed would have to raise rates more quickly in response to this because of inflation, and now it's the exact opposite?
Things have changed. They've changed quickly. We've said that a lot this morning, but some of the language coming out of Europe is really dark. The Russian President Vladimir Putin vowing to demilitarize the country and replace its leaders. Ursula von der Leyen of the European Commission, the president turning around and saying Europe, war is back, and it's being brought back by this man, the Russian president, Ursula von der Leyen, a little bit earlier this morning. And now, Lisa, we're talking about sanctions. The FT out with some reporting moments ago saying the British Prime Minister is very keen and pushing it very hard to eject Russia from the SWIFT payment system. And from what we understand from their reporting, Chancellor Scholz is less keen. Chancellor Scholz warned Johnson on Thursday that his country would not support such a dramatic move, and neither would the EU. The Ukrainians, the foreign minister, very clear that he would.
And right now, this is the nuclear option. Russia has come out and said that in response, they would cut off supplies to energy resources, to gas, to the European Union. And that, frankly, affects Germany more. But what else can they do at a time when Russia has moved this fast? How can they send that message with speed?
The Russian president, Vladimir Putin, saying the government should provide good conditions to businessmen. The government should provide more freedom to business. This is an ongoing conversation at the moment. Just happened moments ago, Lisa, with the Russian President Vladimir Putin speaking to Russian business leaders.
Yeah, also saying we don't plan to damage a system that we are part of, that he is not looking to isolate the nation at a time when the Western alliance is looking to isolate him. How much is he speaking to oligarchs? How much power do the oligarchs have as they get sanctioned in influencing Vladimir Putin's actions?
Have we got Anne-Marie with us? Because I'd love to touch base with her just before we go to the next guest. If we have, I'd love to do that now. Anne-Marie down in Washington, D.C. We catch up with the president in about 60 minutes from now. There's an address from Washington, D.C. with the President of the United States. I understand we're just trying to get her ready, Lisa, to bring her to the camera and get her on the microphone. I understand she's ready now. Anne-Marie, let's talk about an hour from now, what we'll hear from the U.S. President and what we've just heard from the Russian President just moments ago as he speaks to business leaders.
I'm very keen to hear and look at and see who's in this meeting, these oligarchs and business leaders that President Putin is meeting with. I wonder him talking about we're not trying to separate ourselves from the global financial community and the world, is him trying to shore up some of this support, because what oligarchs are hearing is that these are going to be swift, severe sanctions, and many of them are heads of major businesses. I actually spoke to an oligarch this morning, and the tone was that these sanctions are going to hurt the most vulnerable in Russia. It's going to hurt the Moscow middle class, and that who is going to inflict the pain. And I believe it was Tim Ash, who you all just had on. And all of my years going to Russia, the one issue that affects Russians, everyday Russians, is living wages. And Tim spoke about this. This is something they want. They want domestic issues fixed. But President Putin loves to be a little bit more adventurous when it comes to foreign policy. And I think it's incredibly interesting that the morning the U.S. and the West plan to slam sanctions on his economy once again. We've had sanctions 2014. There was sanctions after the poisoning of Yulia and Sergei Skripal in Salisbury, United Kingdom. He is shoring up some support, meeting with business leaders. Now, he's not always very kind to them. I would love to see the pictures of the tone he takes when he is surrounded at this table with Russia's most elite and influential.
AMH, thank you. Looking forward to hearing from the president. Again, expecting that at 12:30 Eastern Time. The team led by David Weston will bring you that coverage a little bit later this morning on TV and radio. Joining us now, I'm pleased to say, is Tom Palmer, the president and CEO of Newmont Mining. Tom, on any other morning, we'd talk about your numbers. This is not any other morning. As a CEO of Newmont, your reaction to what we're seeing play out through Ukraine?
Yeah, good morning. It's an absolute tragedy that's unfolding in Ukraine, and our thoughts and prayers are with the people who are experiencing what's going on there and the suffering that they're experiencing, and unfortunately what's in front of them. It's just an absolute tragedy.
Wonderful to have you with us this morning here on Bloomberg Radio and Bloomberg Television. This will be a global statement. We had a gentleman on that said that Mr. Putin will be a pariah. You need to look, particularly in Australia with Rio Tinto, your former shop, and now with Newmont in Colorado, at China.